Good morning. I'm Diane Finisted Ellis, and today is March 5th, 2026, and I am so excited that we are here today to learn, to grow, and to learn how to encapsulate this market, this very confusing market that we're in of health insurance into three worksheets. That is what we're doing today. So we have a packet. The first packet that we have is in here on this sheet. I said to our participants today, I said, okay, we need to know who you are and what you want to learn from the next 2 days, and then also what you're bringing to the table. So I will start. Like I said, I'm Diane Finisted Ellis, and what I really want to know from these wonderful women that are here with me today, I really want to know if you want to know who the trainers are that I've come across America in all these different subject matters that have helped me grow, and locally who helped me grow and grow the business. Also, I'm wanting to know from them, how do I build a team of communication and support, and what is it that you want to focus on so I can cheer on your wins and I can be an awesome accountability partner for you and just see you grow and transform the lives that surround you and your business. That's what I want to walk away with from these 2 days. And then also, personally, I really want to transform the lives of my clients into two areas that I have not concentrated in the business, but I know it's very, very important to cover it. And that is cancer policies as well as a final expense policy. And so I've had to get over my personal hurdle with those two topics. And so when we get there, oh my gosh, I want you all to pour in and discuss that with me, because I know that's an area of growth for me to be able to conduct that conversation so that a person can give me a solid yes or a solid no, and we can walk away from that instead of me just saying, don't really want to cover that because it's not sexy. I know I've got to get there. So I need your encouragement on that part for me. The other thing that I bring to the table, so I entered the business in 1998. My career is like bookends. And I will say that when I was teaching, about 9 years in between being a full-time in insurance and health insurance and life insurance, and I cut my teeth on long-term care insurance. When I was teaching, I kept my license the whole time because I wanted my clients to be able to reach me and be there for them. And then when I became a principal, everyone kind of knows the story. I love the kids. I didn't really like the adults, and you can't really do it like that. You can't really do it like that. So I thought they were funny when they would act up. I was like, oh, that's hilarious. I was totally entertained, not right. So I went back into the insurance industry like 14 years ago, full time, and have the under and the over 65-year-olds. So my clients are age 0 to 104. Oh my goodness. And she looks good, folks. She looks really good. And that brand new baby looks precious too. And so it's one where any age person I can help. And my problem is in my business, I think I can help everybody. And everyone around me in the business is like, Diane, focus, focus. So hopefully you all will help me focus on this. But that's what I bring to the table: a spirit of friendship, camaraderie, and all the glory, of course, to Almighty. And for bringing us together today, because I know I'm in the presence of rock stars, folks. Wait until you meet all these wonderful ladies. Okay, who's next? What are you bringing?
I'll go next. I love my clients, and just to be able to help them, we obviously need to pivot with the way the insurance industry is, and it seems like they're going to be cutting back on doing the health side of it. So I want to learn the life side of it, and I put to make 100K in ancillary products so I can support myself in the life side and understand it. I've never understood the life side. I don't have any experience in it besides testing once a year. And then what I bring is experience, and a lot of it through hard knocks, wisdom, and trials and errors, and then hopefully some humor too today. So
Yay!
yeah.
Right. And this is Pam Berry, folks.
Listen,
She's famous.
but we doing Christian content creation.
Yes,
So
you
that's
can
what,
find her
yeah.
on Christian
Right.
content creation. She is amazing. She will uplift you every day, 5 times a day, folks. We'll have to like
Too funny.
get the pictures out because I mean they're gorgeous.
If anybody wants to do
They're
one, we'll do one.
absolutely gorgeous. Yes. Yes, it's your
Yeah.
turn.
So basically, I've been in the business for 4 decades because it sounds like
Oh,
Folks,
wow,
look
that
at
sounds
Kathy.
shorter.
Yeah.
Oh, amazing. She is literally a legend
Yeah.
in this business.
boy,
So
that's kind of scary.
That's
isn't it?
rock star.
We're still walking and everything.
That's right.
And for a legend, it's like, oh my God, is she about to fall over? I'm Kathy Conley Jones, and what I bring to my clients is hopefully integrity, that they can also understand that I'm bringing facts. I'm not bringing fiction. And I'm bringing what is the best way to protect. And so my motto has always been protect what matters most. And somebody stole it. I should have coined that. But anyway, so everyone has a different view of protection, but what you have to do is really dig deep and see what it is that they need to protect, right? So I bring that to them. And then I also, because I believe that we all should continue educating ourselves and expanding our knowledge so that we can effectively take care of our clients. That's why I sit in classes, so I can learn more. My business started out on individual life sales,
Okay.
okay? I was a teacher, educator here. I was a teacher, moved out of that, but the individual life and also retirement accounts moved from that into employee benefits. So get to talk to more people at one time, right? But what I still know is I don't care who you're talking to. The most important thing is making sure that you are matching up their needs, not what your wants are, so that they can move forward. So I loved everything that this wonderful woman here said. There are things that I want to learn, and I hope to bring to my clients, especially in my community, because in my community as African Americans, there are individuals that have needs, and sometimes they're not basically taken care of, or they're steered in a different direction that's not in their best interest. So I hope to be a voice of reason and a voice of truth when they look out and say, how do I protect what matters most?
And I think it's really the approach that you have, Kathy, that is so beautiful, that when you're with someone, you make that person feel like they are the only person in the entire world.
They are at that moment.
I know.
Wow.
And
Yeah.
Pam, you do the same thing too. You just zoom in and you're like, okay, this person, everything that's about y'all turn off your phones, you turn off your lives, and you just focus just completely on that person and what their needs are, and then uncovering the things that maybe they don't want to talk about. And you both do it so delicately, because you know the rule that if someone says something, then they're willing to talk about it.
Right.
So if they say, I have a brother, I have a sister, my mom this, my daughter that, my spouse this, and you're like, oh, well, let's talk about them. Tell me more about them. And you explore it to see, like, how much can I ask? You're so respectful in that unpacking of that trust of the relationship. It's something I just admire in both of you. It's just awesome. Oh, Courtney's in the room. Courtney, get on camera so we can see you.
Okay.
Because we can't see Courtney then.
I am Courtney Hudson. I am Diane's assistant. I just started with her in October, so I'm still kind of learning everything. One thing I would like to learn today when I leave this room is how I can be of more assistance to Diane and her clients, because they are what's important, of course. So, and then some things that I think I bring to the table would be, my authenticness, because I'm always going to be myself no matter what. no matter how much it scares me or anything like that, because sometimes I scare myself a little bit. I think I bring compassion. I just graduated from Missouri State in August of last year with my social
Congratulations.
degree. Thank you. So I think that's a big part of the compassion. I also think advocacy is something that I bring to the table. It's something that I've been trying to bring into my life. Ever since my mom passed, I always second guessed, did I advocate hard enough for her, to give her the chance that she needed to survive? So that's something that's always in the back of my mind. But just like Diane was saying, everybody to these two ladies that they have focus in and, view that as an individual. I think something I do differently is view the bigger picture. I think that's part of social work kind of is I'm always focusing on the bigger picture and how I can make an impact more worldwide, than just individual. But at the same time, I am very good at focusing in on individuals, but I look at them, how can they impact the world? And what can they bring to the world? So that's me.
Yeah, Courtney teaches you to fish.
Oh,
There you
I
go.
like that.
She's like, oh, you gotta go fishing? I'm not gonna do that for you. I'm gonna teach you how to fish. And that
Love
starts with me. She's like, oh, you don't want to do this, Diane. You can do this. And I'm like, oh yeah, okay. But it's awesome. I love it that Courtney has this background in social work because when I
Yeah.
was speaking to Voice STL, which is the ombudsman program for 512 nursing homes on this side of Eastern Missouri. So I went in to talk to them and give them information about Medicare and the ins and outs. Courtney kept raising her hand and saying, well, if with my mom, I've experienced this. With my mom, I experienced that. Hey, this is what I experienced. Is that the norm? And she was so inquisitive and so wanting the right information, which we all know information can change in a heartbeat. But she really was seeking that information so she could be a sharer of the right information. And afterwards, I walked up to her and I said, I don't know who you are, but I want you on my team. So when are you graduating and how soon can you call me? Because I need someone like you that wants the truth.
Gave me
And
goosebumps there.
and I
I'm
was
like
like,
thinking I might need one of the.
she's amazing. And so I mean, just always such a nurturer. I will say that she's left me sweet notes. She brought us food today, and
Thank
she
you.
she just is thoughtful in a way where she reminds me a lot of the thoughtfulness of my mom. So that's a wonderful friend.
Yeah, right.
That's my mom and me. That's what that is.
That's why we know they're friends up in heaven.
Yes,
Yeah,
absolutely.
We're like,
story of
those
that.
ladies are having a good time.
Absolutely.
We even have like one of my conference rooms down in my Valley Park office. There's one room where we are. That's kind of like our room where we get everything done and dream and ideate and create and everything. And then there's another room where I meet with clients, and in there's a little sign that says, I believe in angels, and my mom's table's there and my mom's secretary is there. And so Courtney has dubbed that our mom's room. I'm going
Whenever I need a
room.
minute, I go sit in there. I'm
Oh,
like, I'm
that's
sitting in the mom's
Yeah.
room.
I'm sitting in the mom's room.
Yeah.
On my bad days, I'm like, I'm sitting in here today, sorry.
We have to have it.
Yeah.
The day I need an angel, right?
Yeah.
Meditation room.
To come on down. So a couple of things. This is just like housekeeping that you guys are going to get in this. So we have this that we're going to add to it, throughout the next couple of days, these next few days, of what we really want to learn more. This is for ahas. Oh my goodness, I've got to do that. Or I've got to say that. This is what's coming up. This is a creation by Courtney. I wish that you guys could all see this, and it's amazing. And that is the Tune In Tuesdays,
Liking this a lot.
and it is every Tuesday, the second week of every month, not every Tuesday, but the second week of every month, there's a different topic. And so Courtney came to me and said, Diane, you're an educator. I'm a social worker. We should do more. And I said, well, what does that look like? And she said,
That's a good
it
answer.
looks like this. Tune in Tuesday. And then she came up with this gorgeous,
Oh, I love
I
it.
do
she
too.
did all the
Yeah.
graphics, everything. Of course, she did these graphics for an event that we had the other day. And it was one where she said, okay, so the first one was on women's health. We laughed for about 45 minutes on serious stuff. That's already on Zoom. The next one is March 10th on, and that is heart health. So it is one where 1 in 5 people, the deaths are attributed to cardiovascular diseases. So we'll talk about keeping your heart healthy and your heart happy. And then the next month in April, on April 14th, that's Advocacy Matters and Advocacy Awareness, and where you can become an advocate, not only in your own life, but also in the community. And then in May, we're going to talk about mental health. In June, it's Alzheimer's awareness. In July, independence and mobility. August is saving that money. Where can you save that money? And also in September, it's vision boarding for those who have suffered with grief, because we're going to be going into the
I know.
holidays. And it's
Fabulous.
one where
Yeah.
we go, okay, instead of getting to the holidays and then sitting in the grief ahead of time, looking forward to those holidays and saying, this is what I want to do. I want to bake those cookies that my mom made. I want to have that dinner with friends. I want to open that bottle of, cold duck like my mom and dad used to have on New Year's.
Stop that.
I mean, that's important, right? And so, so picturing that and picturing that future. So that way, when you get there, you can say, I plan this, I plan to have this time
That's
to
Great
reminisce.
idea.
So we're excited
I know,
about
that's-
September. And then October, of course, open enrollment is here for Medicare. And then November is Thankful Tuesday. We're hoping that everybody comes on and says what they're thankful for and who they're thankful for, and can send that to them. And then in December, it's all about social connections. So some of the things in December that we go to, it's almost like it's mandatory, to be there. And you kind of are like, what exactly is required of me to be at those things? So thank goodness Courtney is like, we're going to talk about this on Tune In Tuesday. So thank you, Courtney, for stretching
I
all
love
of
that.
us. Yeah,
Can
it's
you
awesome.
send it to us so I started doing a newsletter and I could put it in the newsletter?
Yeah,
Absolutely.
Okay.
yeah, it's
Thank
open
you.
to everyone.
That's
I mean,
great.
everyone, it's open to. And right now, it's just a little teeny tiny podcast that we hope
Right
just,
now, it'll do.
just move out, to
Before
everybody.
you get started more, I want to say to Courtney, this is amazing.
Thank
Let
you.
me tell you why it's even more amazing, because at my church, one of the things that we're dealing with is because parishioners are passing away,
Oh, yeah.
parishioners are getting older. They are in situations where they need the types of products we have, but we are talking about the social connectedness, right? A lot of them don't have family members around. They're dealing with grief, loneliness. They're dealing with a lot of things, trying to navigate the systems of insurance, right? And not always prepared. And one of the things that I said to our parish council was, we need to think more about the outreach, not only on Sunday, but we need to be doing more in our community. And everything that you have put here focuses on the items that we talked about, the loneliness, knowing how to navigate
Right.
different scenarios, so even their
Mental
children,
health, right? all the
mental
things.
health, right?
Mhm.
So I'd like to thank you so much,
Yeah.
because you just created the.
That's fabulous.
It really did, thank you.
Yeah.
That's where my social work degree
That's
comes into play,
great.
really, and it really is, like, everybody's like, well, you don't have a social work job, and I'm like, but I do,
But you do.
but I do, and
Yeah.
I use that education every day, everybody's like, oh, it's such a waste, I'm like, no, I would
No,
not be who I am today without that education.
yes.
Yeah.
And a lot of that is my mom too, honestly.
Yeah,
It's
for
things
sure.
I wish that she would have had before
Oh.
she passed.
Absolutely.
And then I think it's realizing that there's a lot of people that feel the same as you do. You just don't know it yet.
Right, right.
So I think
I
that helps
agree.
provide that link. and
Because it's
connectedness.
taboo topics, you know,
Yeah.
somehow, you know, like we talked about that with the women's health, that somehow as women, we feel like we do have to have this like thing of perfection, you know, like everything's great, everything's fine, and then we're going, no, it's not.
We're telling you it's not.
Now, relatability seems to be huge. Everybody thinks they wait till everything's perfect to do something, and yet just being humble and relatable.
Oh my gosh, it was
It's
like
so
yesterday, a client called me on the phone and he goes, I had not even had a coffee yet. And so my brain was not working and I was trying to do it from memory instead of looking at my computer. And I said, oh no, I think you have this plan. He said, oh no, Diane, that's not my plan. And I said, okay, it's not your plan then. And I said, because I haven't had any coffee. I said, I'm going to be really smart in 10 minutes. Let me call you back. So I had my computer.
Let me check in on myself.
I had my computer, I had my coffee. 10 minutes later, I called. I'm like, hey, guess what? You're right. You're hired. You can be my Medicare advisor.
Relatability.
Yes, Diane, the next time I call you, I'm going to ask you, have you had your coffee? Is your computer open?
Yeah. Absolutely.
So I think being normal
Yes.
and being human, I mean, like that is what it's about, right?
It's normalizing being a human.
Yeah.
Yeah.
It is, yeah.
So the other things that I have in here in your goodie bag here, your goodie folder, this is the letter that I send out to clients when they get their policies. All policies, we as brokers and agents, we can choose to have the policy come to us or we can send it directly to the client. So mostly I have it sent to me so that I can remind them, hey, your policies have arrived. Please keep this copy for your records. If you have any questions, please contact me. Thank you for your business and thank you for not keeping us a secret. And then I've got my QR code there. And then I usually clip a couple of my cards on there and then also my magnet on there that they can put on the refrigerator. And it's just, again, it's a way to say thank you. And so instead of writing a separate thank you card, they're going to get that when they have their policy. So I wanted you guys to know about that too.
Do you go out and deliver it, or when you mail it with all that?
Sometimes I deliver it.
Okay.
Sometimes I'll mail it. I'll tell you one delivery story that is hilarious and then I'll get back on track. And that was a client that was out in Troy, Missouri. And I went out there and I said, was there anything else that you wanted to discuss? Because we reviewed her Medicare. And she said, yeah, actually, yeah. She said, I really need a shower, one of those bath, all in one, you know, where you walk into it, the walk-in bathtub. And I'm like, yeah, the walk-in bathtub. I said, how much are those? And she goes, oh, at the time they were about $7,000. And she goes, if you could just find me $7,000. And I said, well, sure. Let me think about that. I said, well, now wait a minute. Do you have a life insurance policy? And she said, yes. And I go, do you have cash value in your life insurance policy? And she said, I think I might. So we called. She had $9,000
Really?
of cash value. So we took the 7,000, we cashed it out. Okay, you don't do that, you know, and then cancel. You cash it out first. So then we called. She canceled. She did cancel. She cashed it out. She got the check for 9,000. She used 7,000 for the walk-in tub, and the 2,000 she had left over, she used that for her new policy that she got for a whole life policy that would also have, you know, eventually cash value in there too. And so I did go deliver that policy to her. And so when I delivered the policy to her, y'all are going to laugh so hard. She comes to the door and she has a stack of towels, these fluffy towels. And I'm like, well, what's that for? She goes, you have got to experience this. Go take a bath. It is amazing. And I'm like, are you kidding me? And she goes, I go, is your husband here? She goes, he's here, but that's okay. He's in the other room. You go experience this. And so I'm like, oh my gosh, okay.
funny.
So I did. And then she had like little candles around there, and they weren't lit or anything. She had like her little bottle of wine you could see there. And I'm like, oh my gosh, I'm not going
That's
to indulge
story.
in
Yeah.
all of this.
Funny.
And I told her, I said, I did not indulge in your precious moment. But I did, I go, it was amazing. She goes,
Oh,
it is. She goes, all because of you.
cool. That's awesome.
Isn't that
Yeah,
it's
a great story.
hilarious
Yeah.
story? Okay, that doesn't happen every day, folks.
Yes.
But I do take a bath every day.
Oh my God.
So anyway, but that's what we can do. So that's why we're here to talk about these crazy things. The other thing is this one. This is page 10 of the Medicare and You book, and we're going to be going over that just quickly in a second. And then this is the scenario that I gave to everyone. And that was, I said, okay, Pam, okay, Kathy, okay, Courtney, here is our scenario that we're going to be working on.
That's right.
And I said, I can't wait till tomorrow. Here it is today. That's where we are. This is the scenario. A woman calls and she says, Diane or Kathy or Pam, Courtney, I'm turning 65, but my husband is 5 years younger. Now she has life insurance and long-term care insurance through her work, and she needs help finding dental and vision for both she and her husband, and then also finding medical insurance for her husband, comparing that to what she could get from her work plan. And then she needs to review other plans too, because her mom has a long-term care insurance plan that she got years ago. And so in 3 worksheets that we'll go over today and also tomorrow, we're going to work through this particular issue that she has presented in a 1 paragraph. And it is for the over 65 worksheet, the under 65 worksheet, and also the short-term to long-term care worksheet. Life insurance is an animal all to its own. So, and you'll be able to recommend her and her spouse plans, and they will be able to understand why you're making that recommendation. That is our goal of today and tomorrow. So with that in mind, we're going to start with you guys getting your folders.
All right.
So here you go,
Thank
folder. Green for go.
Thank you.
Green for go. Okay, so we're going to start here on the Medicare. The reason why I want to start with Medicare is because it's going from the known to the unknown. So she comes in and she says, okay, Diane, I have a plan with my employer. You want to know what that employer plan is. You want to know what the deductible is, the max out of pocket, all of those things. And so you can say, okay, this is how Medicare is going to work. So what I do is I fold it in half, and you guys can use the Medicare and You book, page 10, and you can copy those and fold them in half. And I say, we're going to talk through this one first. So when she went, or he, but in our scenario, it's she is retiring. You want to know if that plan is going to stay the same, and if they're going to carry that deductible or max out of pocket that they might have met on that plan already, because it's going to restart if they start over with Medicare, especially in the middle of the year. Does that make sense? Okay. So what we have here is, as I explain it, and I do a class called Medikaraoke for folks out in the community. So part A is automatic, systematic. You've been working for 40 quarters, all of your life. So you earned it. You earned A, which is the hospital. And so because it's automatic and systematic, why it's grease lightning and when it comes to Medikaraoke. And that's what we sing when I present to, the people that have Medicare or are going to be having Medicare. And then part B is, your doctors and all your providers. Now, part B is the one that covers 80%. and it leaves you holding 20%. So that 20% is going to be covered by either a supplement, or it could be the employer plan, or it is covered by the other side, which we can't see right now, which is called Part C, the combination, the Medicare Advantage plans. So we have Part D on this side. If you have A and B, and there's a process of getting B. So when you're turning 65, you're going to receive that process typically from Pam, myself, Kathy, or Courtney, and they're going to say to you, okay, here's where you're going to go for the ready to sign up. And you can sign up 3 ways. You can call and make an appointment and sign up over the phone. You can go to the Social Security office by saying to them, here's my form for Part B. I need help knowing if I filled this form out right. Of course, you can't make an appointment with them right now, but you can always ask if you need help with the form. So that'll get you in. Or
that too.
yeah, or you can mail it in and or fax it in. So it takes, once they receive it, it takes 30 to 45 days to process it. So you can start that process 3 months prior to the first of your month, their birthday month. So that's how you do that. Now, if you have an employer like this woman has, then you have to have an employer form signed as well and included with that Part B process. Okay, so now you have Part B. So now we have, it's been issued. That's going to cover 80%, leave you holding 20%. Okay, this is where I need to, what you need?
Move this over there.
Oh, I was just thinking
So-
all that stuff.
Oh,
Yep.
hello.
Thank you.
There's in there. They get a
So-
clear view.
Yes, that's a good idea.
Thank you, Vanna.
Right.
So what happens is, in that part B, 80%, 20%. An example would be, I'm just going to use St. Clair Hospital in St. Louis. All the pricing, as we know, is not transparent. We wish that it was. And it was a couple of years ago, a client went in 3 stents in her heart. The bill was $542,000. So she ran it through Part B of Medicare. It was $140,000. On this side, if she just has A and B, then she's passed on 20%. So it was $28,000 bill. Now let's just travel down. This is why you have a supplement or the employer, or you would have the Advantage plan. Let's just travel down. So Part D plans are no longer commissionable, except there's one right now in the St. Louis area, but it's more expensive than all the other plans. So we look a little foolish to tell you to get that plan unless you actually do need it for whatever reason. But they start, there's a company called WellCare this year in 2026. It starts at $9.60. It has an overabundant amount of people on that plan. It is tricky to get into customer service. However, they will help you. And then the plan after that is the company after that price point and a little bit higher is Humana. And then they just keep on going up from there. And I'm telling you this because we as brokers, we can't take you through that process. We can, as a friend, wink, wink, we might be able to lead you down this path, but we can't actually give you a professional recommendation because we do not have the errors and omissions covering us for that recommendation. So if you got really mad at us, we are left out in left field and we might lose our careers. So we're not willing to do that for you. We're willing to do a lot, but not that. So, but wink, wink, we'll be your friend and say, here's your number for WellCare and Humana or the other companies. So just know Part D, my purpose in letting you know that is it starts at $9.60. And then you have your copays when you go and get your medication. So you give all your information to WellCare or Humana or whatever company for Part D, and they'll let you know how much you'll be spending for the year. It can't be more than $2,100 for your copays. That's where the cap is for 2026. And it's probably going to go up in 2027. I think it will go up. Yep, definitely. And then the supplemental coverage interestingly enough, you can have a plan, if you were born, or actually not born, but if you turn 65, before 2020, you can get a Plan F, which is a full match to that 20%. Right now, Plan G is still popular across the country. It is a full match, except you have $280 one time as a deductible, and then you also have a premium. Missouri premiums are very low as compared to other premiums in other states. I say that because not everybody you love lives in St. Louis. So I have 29 states because, family members will say, can you help my aunt? Can you help my cousin? This kind of thing. I didn't go after those 29 states, believe me. They don't want me. But I'm there. So anyway, the supplementals are very, very expensive in the other states. And then Missouri happens to be one of those states that has a birthday rule. So if you get into a plan, whether it's a G plan or a high G plan, high G means that you are going to have a $3,000 deductible. It's a way to cut things down in price. So if, in Missouri, as an example, in St. Louis, Missouri, if you are this woman who's turning 65, or example, and you wanted to have a plan that had a gym membership, you're probably looking at about $212 a month. The plans start right around $185 a month for a G. However, a high G is right around $50. And then if you partner that with an ancillary plan that covers that $3,000, and we're going to get into that, that's a really great idea. Because you're in a smaller pool of people, and you're able to get ancillary plans that have much more control of the premium, and have not experienced rate increases, where supplemental plans historically experience rate increases. So people always say, well, Di, on this side, that A, the B, the D, and the supplement, what am I paying for? Well, the A you earned, the B is going to start this year at $202.90 unless you've made more money. And if you've made more money, or your couple has made more money than what the statistics say, or where the stat is before it climbs, then you're at $202.90. However, some people pay into the 500s because of their income. Now, there's a little trick there that you need to know. And that is, they look back 2 years at your adjusted gross income. If your income currently is not indicative of that income of which they have recorded 2 years ago, you can appeal it. And you can say, no, this is what I'm currently earning, and you might be able to come back down. Now, why is that important? It's important because IRMA, which is not a name you really ever want to hear when it comes to Medicare, it's the rate adjustment, your monthly rate adjustment based on your income for Part B and Part D. So if it's not accurate when you get that, don't just think you've got to receive that from the government. You can actually appeal it. And if you need to have the appeal form, Pam has it, I have it, Kathy has it, Courtney has it, and we can get that appeal form for you. Because it needs to be reflecting your current situation. Okay, so Part B. So we've got A, B, D as in drugs, and then also the supplement. On this side, after the supplement, you don't get anything for dental, vision, hearing. And there's only one company that includes a gym membership in there as of right now. So all of that is extra, and you are absorbing that cost. Now, this particular situation, this client has an employer. And so typically, you can part out when you leave that employer. You can say, I don't want the medical, but I do want to continue to have the dental and the vision. So for example, I had a client the other day, it was 27 cents for a $1,500 plan for dental. And I said, don't you dare leave that.
Yeah.
And I said, you need to keep that. She said, well, Diane, I'm going to be off the medical. I go, it doesn't matter. Go to your HR and see if you can get that. Ask them. It's not a guarantee that you'll get it, but I said, just ask them if you can. And she could. She's like, oh my gosh, now I need to have a private dental on top of this so I can go get my, this done and that done. And I'm like, wow, you really have a messy mouth. I didn't tell her that, but I was thinking it. So anyway, so all of those things that I just mentioned on this side, those are all extra benefits. Okay, so this is Dad's side on my side, this side with the supplement. This was the side that Dad was on because he wanted to write his check every single month and know exactly how much was coming out. And so when he went to the doctor, he didn't want to spend any money because he'd already prepaid for it. This is the prepaid side. This is the side where you can go anywhere that Medicare will let you go, including the Mayo Clinic. Okay. When I turn the page, can't go to the Mayo Clinic on the other side. Okay. Are you guys ready for me to turn the page? Before I do, I'm coming to the screen so you can see it. Here we go. Courtney, hold that up. The other side. Here we go. Here we go. Check it out. Page 10 of the Medicare and You book. And if you see that picture of me, my dad saw that and he said, oh my gosh, Diney, you got to look like that every day. And I'm like, oh, thanks, Dad. Beautiful. Roger. Okay, so now we got Roger's side. Now let's go to Jane's side. Here, let's flip it right here so you guys can see this side. Okay, this side is the Medicare Advantage side. This is the side that says in our area in St. Louis, most of the plans on this side have a 0 premium. And what it is, it's Part C, so it's a combination. You're getting your A for your hospital, your B for your doctors, and you're still paying for B, no matter what side you're on. And then you're paying your D for your drug plan. You're not paying for it on this side, it's included. And then you get some extras. Well, wow, what are the extras? The extras have been dental and vision and hearing and also gym membership. I get these calls and my clients will say, Diane, I want my silver sneakers. Okay, I got you. Oh, Diane, I want to go to Lifetime Fitness. What do I need? Okay, we'll get you over there. So do not be dismayed by all of the shiny objects on this side. We're talking medical insurance plus a bonus. This is medical insurance plus bonus. You would be so surprised that the majority of people, the reason why they switched plans this year across America, and I couldn't believe this when I got this stat when I was in Washington, D.C., which I missed you there this year, Kathy. They go, the main reason why people have changed plans amongst the Medicare Advantage is for dental. That is not medical.
Interesting.
It's not medical.
Got me all upset there.
Diane, how much do they give for glasses? Who cares? But y'all care about this. I know you do. You're like, where's my free stuff? So this could be very enticing for a lot of people. It was for my mom, okay? Because my mom was like, I don't care if I have to pay. She'd tell my dad, I don't care, Roger, if I have to pay when I go see my specialist, or I have to pay something when I go to the hospital. And Dad would say, what? You don't care because I'm paying the bill. But he wouldn't say that story. He just smiled. And so anyway, Mom was like, I don't care. I just want that extra stuff. I want my dental. I want all that. I want it to all be included. And my dad was like, oh, Jane. So I want to tell you though, I have no dog in this fight. None whatsoever. We're going to look at you. We're going to tell you, you are our dog. You are our boss. We work for you. When you hire us, we work for you. If you don't hire us, we don't have a job. So we do what you want to do, but we're going to tell you the good, the bad, the ugly. And we're also going to tell you, you pick the best of the worst. No, I'm really have gone way too far with that, but but what I'm saying is dad was on this side, mom was on this side, dad was traditional Medicare, mom was the Advantage side, and folks, both of them were Medicare millionaires. Okay, what does that mean? What it means is dad had a heart condition and mom had a triplicate of diagnoses. So dad received over $1 million in care costs covered by this side of Medicare, and mom received over $1 million of care costs covered by this side of Medicare. So it really depends if you're more like my dad or you're more like my mom. And that's what I tell everybody. Okay. I also tell them this scenario. It's like you're driving a car. On dad's side, dad's driving his car, and then he can add passengers in his car, dental, vision, hearing, those kinds of things. Like, you could add the extra stuff onto the accoutrements of a car. On this side, the government's driving the car, mom's in the passenger seat. It's like the Uber, and all the passengers are already in there. And it's just a matter of, are they going to talk or are they not going to talk? Because they're already there. So if you want to have dental, vision, and hearing, it's already in your car. So that just kind of breaks it down really, really quickly to know the different sides. Yes, yes. Okay, so now we're still talking to this client, and we're getting the information. And she has said, well, my employer, it's going to be more than $202.90 a month for Part B. I'm going to have to spend more than that to keep my current plan. And then my question is, have you put anything towards the maximum out of pocket on your current plan? And she says, no, I am completely healthy. Okay, well, then we need to pick your side. And after explaining the two sides, she can choose either this side to go down or this side to go down. So that is the first chart that we look at. And we have to keep in mind also, I say to her, and when you come off of your employer plan, is your husband, who's 5 years younger, he's going to lose his ability to keep his employer plan. And she says, yes, I'll need to find him some insurance. Okay, so you need to know how much it is that they're spending and how much that deductible is, and that max out of pocket that they're exposed to, so that you can do the combination of the Medicare plan for her and the under 65 plan for him for the next 5 years. And you can see if it makes sense. The other thing that you need to ask her is, in your employer, with your employer, do you have coverage for over 20 employees? And if she says yes, then what typically happens is she wouldn't have to carry Part B for the next 5 years, waiting for her husband to turn 65. And so that saves her from spending that $202.90. So you have to factor that in too. Okay, you with me? So when you factor that in, it's a matter of looking at, okay, so is that going to cost or is it not? So if she says, no, we have less than 20 people, okay, Medicare still makes sense. You're still saving money. If she says, no, we've got more than the 20 people, then she needs to call and verify with the HR that coverage is credible coverage. Now, I say that because credible coverage by having that, you avoid, when you go onto Medicare, you avoid having IRMA, that nasty name of the rate increase, because you didn't get your Medicare when you were first allowed to get it. Now, there's no law that HR has to explain this to you. There's no law that I have to explain this to you, or that any of us in this room have to explain this to you. But I'm telling you, it can bite you if you don't know about this. So I would ask that client, okay, how many people do you have in your workplace and that would be on this insurance? She says over 50. Okay, great. Then and over 20. Okay, great. You need to have this conversation with HR and see if this 20290 is going to be removed, because it goes into a whole other conversation of taking that plan that she's on with her employer and then beefing it up in the private side. You can actually save her and her husband money by doing it that way. That's why this chart right here, and you'll see it, it says the not under 65, not this chart, just, where'd it go? Oh, okay, Medicare worksheet. So Medicare worksheet. Do you have it?
Get one. Oh, wait, I did. I'm sorry.
Did you get it? Okay,
Yeah, that's
okay,
fine.
and I've got extra ones
Okay.
too, so you can write all over it and you can have a clean copy and everything. Okay,
Great.
so we're gonna show you, did you get it?
I don't know, hold on.
Mine was stuck to my top page, so.
There it is, okay.
Okay.
This
So,
one.
we're gonna put here her Medicare, and the Medicare on this worksheet right here could be her employer insurance, because it could be much better and much cheaper than having the Medicare. It just depends on if it's going to be a credible coverage or not a credible coverage, because that's $202.90 right there that's just gonna go away or not go away to factor in. And then it's a matter of, okay, what is the overall cost for the two of them? And then sometimes they'll let the spouse stay on the coverage as long as they're going to continue to work, or if they haven't retired or they're semi-retired. Sometimes that is a possibility, just to have the spouse, and you need to ask that question too. So you're getting real numbers in order to compare this with. And so once you get the real numbers, you're going to put down, okay, the year that they got it, the plan, the maximum out of pocket, and then the benefit that they have. And so if they keep the employer insurance, you need a copy of the employer insurance. You need a copy of it. And you need to be able to review it. You need to be able to highlight it. And here's the things you're looking for in that employer insurance, because you want to see if there are ways that you need to cover and allow them to know you've got a gap, and they need to know what the gaps are. So if it's employer insurance, you're going to look for a hospital indemnity. Is it in there? And then you want to ask them, when you are retiree age, are you losing a benefit for home health care? Or is there already a benefit of home health care in there? Okay. You also want to have them ask the employer, in order to stay on your employer insurance, are you requiring me to be on Part B? Because even though it's employer insurance, that employer could have modeled that insurance after a Medicare plan, which requires them to still pay for Part B, even though they might have 20 or more employees. Okay, so that's tricky. So you got to ask that question. And then you want to look at the home health care piece. typically you'll see about 9, maybe 6 to 9 visits for home health care on an employer plan. When Kathy gets back, we'll ask her what she's seeing on her employer plans. And then also you want to look for the cancer policy. And you want to see if that was an ancillary, meaning an additional policy, or if that was something that's portable, meaning they leave their job, they're still able to keep it. And then the other one that you always want to ask is life insurance. Is it portable? When you leave your job, are you able to keep it? And how much does the premium go up? And so you can find out, okay, is it a term policy or is it a whole life policy? Is it term meaning there's only a certain term of time and a term of money? And then a whole life policy means you have that policy for your whole life. Meaning if you, and you also start getting a cash value in that whole life policy. So you need to be able to have that conversation with your employer and say, what do I have? What is portable? You don't necessarily need to know how to, understand all the ins and outs of it. That's what we're here for, to allow you to see, okay, these are your options. So with this doesn't have a column for life insurance because we're really concentrating on the health insurance here. So when I put the numbers in here and I say, okay, here's your recommendation for your plan year, and when the date is going to start, and Courtney's going to just hold this up there so you can see what I'm talking about. Okay, move it over to the, there we go. So if you want one of those, text me at 314-302-5743. And then you have, you have the recommendation plan for your plan year. And at the bottom of that first column, you have the Part B premium, and then you have the premium for the plan that you're paying. So you will have chosen either the employer plan, or you've chosen dad's side, with the supplement, or mom's side with the Advantage plan. So once you have written all of those things in there, then it's a matter of where are the gaps. Okay. So let's use this scenario. Had a client yesterday who said, Diane, I do want a high G plan. And again, that's on the supplemental side. However, you're taking on $3,000 as a deductible for yourself with a high G. And I said, why would you do that? And he said, because he said, Diane, and I wanted these answers from him. And he's very smart. He goes, because I want to be on the side that hasn't had the rate increases, because supplemental typically has had rate increases. So he said, I want to cover that $3,000. How do we do it? And I'm like, well, how about when you go to the hospital, we get you a hospital indemnity plan, and that hospital indemnity plan is going to pay you $500 a day for 6 days in the hospital. So there's your $3,000. And he was like, okay. And I said, the other thing that's going to make you spend that $3,000 is if you go to rehab. So when you go to rehab, you could earn the minimum of $100 a day, day 1 through day 50. So if you're in there 50 days, then you're going to get $5,000. So you need to advocate for yourself when you're in there. Leave me in here. Leave me in here. Leave me in here. So that way, then you'd have $5,000. And then what you would do is you would have like a little bit of money go towards outpatient surgery. So you'd have $250 come your way from outpatient surgery, and $250 come your way if you wanted to, ride in an ambulance. Or you would also add physical therapy, days 1 through probably days 30. And you would get $50 a day for physical therapy, occupational therapy, and 5 days could be towards chiropractic. And he goes, well, my gosh, Diane, if all that happened, I'm getting a lot of money. And I said, you certainly are. I said, you're going to get $10,000. And I said, if all those things happen to you, he goes, so one time? I go, no, it happens again. Probably a year later, 6 months later, it's going to happen. It's going to pay you again. It depends on the policy, it depends on who we write it with. And he goes, man, that's going to be expensive. Folks, no, it is not expensive. For him, it was $84 in Missouri. He's 72.
That's great.
Yes. And then his plan for the high G was $72. So he was paying, just under $160, and he's got it all shored up, where he would have been paying for a G plan. It would have been 200 and actually for him it was $228 a month, and he would have still had to pay $280 out of his pocket. So this high G, this is exciting because the numbers will rise in the supplement. We know this to be true, but the numbers have not risen. That means that doesn't mean that they can't, but they have not ever risen yet on the ancillary plans once you get in them. So this is a really cool idea. I love this idea. Hope you guys love it too. Okay.
I didn't know about it. So.
Yeah, isn't it interesting?
Yeah.
It's very interesting. So not all companies have it. Let's see, Humana has it, and Mutual Omaha has it, and those are competitive. It's a Mutual Omaha company have it, and those are here in the St. Louis area. But there are plans, about 26, that kind of roam around all around the country on the supplemental side. Not as many offer the high G, but there's a program that I have as an integrity partner that I can go in, and it's CSG actuarial, thank God for them. And then it'll print out everything that's available to them, because high G and G and any other plan that's a supplement is like car shopping. So let me give you this example. You go down the street and you see the Cadillac, you're like, wow, $54,000. I love it. And then you go down the street further and you see the exact same car, exact same equipment, everything, $74,000. And you're like, why? Why is that? It's the exact same thing. Well, you've got your marketing, you've got your people, you got your payroll, you got your advertising, and everybody does it a little bit differently, right? That's the same idea with a supplement. Everybody has the same product, but they do it just a little bit different behind the scenes to get that product to you. So that's why all of the difference in pricing. So if you have a birthday rule month and you happen to be on that side of the G plan and the supplement, then you can shop it every year for a lower price. Now that makes brokers angry, not us, because we're like, let's get you the best thing that we can. But other brokers, they don't make any money doing that for you. So they're not even gonna tell you about that. But we're gonna tell you lots of ways to save money. Because we're awesome. That's what we're gonna do. Oh my gosh. So, I think you'll enjoy that. Okay, so questions so far. Pam asked me some questions about that.
Well, I didn't know about the high G. I've seen it, but I have never utilized it. So this is opening up a whole new way to go.
Isn't it exciting?
Yep, I love it all.
I love it too, because then you have money that is that you can use for, the client is able to say, oh, I do want dental right now. I don't want to wait. Or I do want to go ahead and add a gym membership. And even if you did that, you still have better coverage and it's lower than what a G would cost in our area. It's not always the same at all areas, but we're really blessed in St. Louis. Sorry, folks, but we're blessed to move to St. Louis. So Kathy, we had a question about the group plan, and it was, so group plans, the HR department is not required to tell them about COBRA,
I
about
have no idea.
credible
They don't
coverage.
seem
No.
to.
HR departments really are totally, I'm gonna use the term ignorant or uninformed, that's probably a better term, as it relates to moving from a employer-sponsored plan to Medicare. They have no clue. So that's why I've partnered, I won't say partner, I've become a
The niche.
resource.
Uh-huh.
Yeah.
Yeah.
So they call, and that's why it's important, because the relationship of having been with them through their group plan, I understand their plan, I understand the different things, and they just don't, and they just sort of say, call them, and I say, thank you.
That's awesome. That's wonderful because it needs to happen.
Yeah, it really does.
Mhm.
That's why, you and I talked about, there are organizations that you can actually approach. I would start off with smaller organizations. If they have over 25 employees, definitely over 50, and ask them, how is their HR department, which is usually one person who's really overworked, or
Mhm.
how are they handling the transition from a group plan to Medicare for their employees? And because they don't know, that's where, and you ask just little questions because it disturbs them, and that's what you want to do, right? Because then you want to disturb them, and because you have the answer. And so everything from when you started talking about, if there's a woman who's 65, she's becoming 65, and is she still going to be working there? Or if she's leaving, or she has a spouse who is 60, how does that thing work? And I always explain to people in the HR department, once your employee is eligible for Medicare and they are leaving, because there's also the option for them staying, so that's a
Mhm.
different story, and I don't want to take over their time.
No, I take it over. That's why I turned
Once
to
you
you.
have them leaving, then what happens when you go on Medicare is you separate. Everybody becomes an individual. When you're on group, you have employee, employee and spouse, employee and children, employee and full family. So they get to group and care for those people. Now, she's leaving. She's eligible for Medicare. Oh my, the spouse is not eligible for Medicare, not 65, and can't go on her plan as individual plan. So all of that is a part of the conversation that you get them to start talking about. What can they do? Well, for that individual, that is their spouse, they can stay on because they're on the group plan because an employee became eligible for Medicare. They need to look at that, depending on the health situation,
Right.
depending on what's going on in medical insurance now. Oh my God.
The changes.
But all of those things
Right.
that you really want to take a look at. And I thought you said something earlier, which was really important. When an individual is eligible to move to Medicare and they have their group dental and vision, it's eligible for COBRA. They can carry that with them. So you always want to talk to them about, you can maintain that, because of course, most people think that, oh, Medicare is going to cover my dental and vision. That doesn't work. But that idea, keep that, because they probably already have satisfied any waiting periods for dental, and they have a lot of other
Right,
things.
right.
But then they should purchase an ancillary plan,
Mhm.
because at that point, usually the ancillary plan has a waiting period for major services, things of that nature. But buy it, because what happens is, in that interim where you have that 18 months, You keep your current plan, you keep chugging along with it. You have your new ancillary plan, it's kind of chugging along almost like the caboose. When this one goes away in 18 months, because it's Cobra, only eligible for 18 months, you have a plan that you've had for more than 12 months, which means that you have satisfied your ability to have access to the major services and all of that. So I think that that's one of the most important things that we as brokers can do is talk to employers that have Medicare eligible or getting to be Medicare eligible. You start talking to them about these things. So at that moment, they're going to think, I think I better call Kathy. I think I better call Diane. Somebody calls somebody who can help us. And that's where I think our value really, basically you elevate your value and your knowledge to
Right.
that person.
Absolutely.
Yeah.
Absolutely, because I think it's an extension of that person. It's the same when we're contacted by financial planners and they say, okay, here's where we're at. Here are the holes, and now we have, Medicare, and it's really difficult to be just so well versed in everything. And so they want us to partner with
That's
them.
right.
They want us to come in with that, because the perspective that we see is so much more broad in gathering of the information, because it's the health portfolio. It's the one thing that if you don't have that portfolio complete, as you guys know, and we've experienced with our clients, that if it's not complete, then it's there for the taking. And the bills come in and you cannot avoid it. And it can often bankrupt a family,
Exactly.
without this type of insurance.
Exactly.
And to know when to activate the insurance. And that's when, clients will say to me, Diane, so I did get that hospital indemnity. So going back to, my client that said, I want to have that hospital indemnity to go with the Plan G. And so many have the hospital indemnity to fill in the gaps for the Advantage plan as
Exactly.
well.
Mhm.
And they'll say, well, when do I call you? When am I supposed to call you? And I'm like, call me when you're in the hospital,
Right.
and call me, because I want to know. And so I have a sheet that has how everyone could be protected with a hospital plan, how everybody could be protected with the home care plan, how everybody can be protected with a cancer plan. And that way, every year when I review with them, I'll just say, are any of these triggers, did any of these get triggered this past year that we need to submit claims that we don't know about? But they do know that to call me, because what happens with the home health care piece, especially the hospital, when the social worker at the hospital is deciding whether or not you are going to go to rehab or you're going to go home, it's oftentimes based on the information that they have right in front of them, which is, had anyone come visit them in the hospital? If the answer is no, they're most likely not going to suggest home health care. They're going to advocate for a rehab, especially if they think this person is single. So that's when it's really important that they call and they let my office know I'm in the hospital, so that way I can let them know, let the social worker know that you have a policy for home health care that's going to provide this, this, and this. So if you want to go home, they're not looking at you as a risk. Because that's what they do not want them to boomerang back into the hospital. Because when they boomerang back to the hospital for the same reason in the same episode, the hospital, I'm going to look at y'all and tell you this, the hospital is not paid when you boomerang back. So they want to make sure you're not going to boomerang back. That's the whole point. So that's so that hospital indemnity becomes very important, because it's one where when you're in the hospital, so in that scenario, with a client that was 72, and he got this policy to cover the hospital.
Mhm.
When he goes in, I want him to call me because I want to remind him, you're getting $500 a day. You're going to get, if you're in there for 6 days, you're going to be able to get $3,000,
Right.
and your $3,000 is going to go to,
That's paid directly
Is-
to them.
it's paid directly to them. So he can either have that bill spread out for, months with the hospital, or he could say, I'm gonna take that 3,000 and just pay off my hospital bill for the $3,000, a high G deductible. So it's exciting that he's able to do that. He goes, so then, Di, if I went to the rehab and all that money is my money? And I'm like, well, it's always your money. You just, at that point, it's, you can spend it on a birthday party. If you want to, or, get well and go to Europe. I don't, or just, I said, or pay your mortgage, or your house payment, your car payment, that kind of thing. And he
Europe sounds better.
yeah, it's not right. And so, I mean, it's amazing. And so a lot of people don't realize that, like Kathy said, when that money comes to you, it's tax-free. It's sold on a life insurance chassis,
That's the benefit right there.
right there.
It's tax-free. You
Mhm.
do not have to add this to your income tax at
Yes.
the end of the year.
Exactly.
It's a benefit.
It is. And so, and what's really exciting is that one of the companies has come out with an RX reimbursement on the hospital indemnity. Yes,
I didn't know
I
that.
haven't
yes.
heard that either.
Wellity, but it used to be
You
Medico.
people know that.
So,
You know that. That's why we have
Right.
our wonderful.
Yes.
That's what it is.
you guys are so funny. So I know that because of Mike Chin telling us that at Jay Berg and Associates meeting the other day, and I'm like, oh my gosh, that's amazing. So I mean, it was I couldn't believe it. So what that means is the RX, and there's no limit to how many companies you can send the same RX to. Oh God, please do not change this in the world, because this is amazing.
We have to be real careful here.
Yeah.
Because we don't want people thinking that we're going to sort of take
Construe the
much of
system.
that. If you already have the policy, you shouldn't be purchasing the policy specifically for the purpose
Right,
Yeah.
right.
of kiting the insurance.
Exactly. It's the
RX.
same,
They
the same
are-
reason I'm getting a Medicare Advantage plan, because you want the dental. Yes.
We'll be all over.
2 years
Next thing you know,
ago,
it's
golf clubs.
Oh my gosh, new shoes. I want my new shoes, Diane.
I'm going-
Okay, me too.
I'm gonna ask the question that you maybe you've already answered when I was out of the room.
Mhm.
And that is, when insurance companies and hospitals now, you have an individual who goes in and they put them on the 23.5 hour.
Oh, holding.
Yeah, they're holding,
Yes.
right? And so a lot of people don't understand, am I inpatient or am I outpatient? Or exactly how will my coverage, your insurance coverage, which is important that you need to
Right,
know,
right.
Medicare, or if you have
Absolutely.
individual through a group
Mhm.
versus they release you at 23 hours and 10 minutes. How does their program, your maybe it's your home care, is your hospital indemnity, how does that speak to that? Is it a 24 hour? Is it up on basically being admitted, because they say admission doesn't really happen unless you've had a 24 hour stay. So have you spoken about that? And I was just.
No,
thinking it.
but there's several different companies that have a different interpretation of that.
Okay.
It's one that kind of separates the wheat from the chaff, as they say. It's like, okay, which one is really gonna hold it? And what we see is that it's one company that's very popular has 6 hours. And if you're
6
the,
hours?
if you're in there 6 hours, it counts as a day. And so, and that particular company also says, we will pay if you are observation or if you're inpatient. So for those of you that don't know, the distinction is inpatient means you have a Medicare code or a code from the hospital when you are, under 65 and over 65. A lot of hospital systems just use the Medicare codes as a general rule. So you get a code and they are saying, this is why you are in there. And then they are predicting natural predictors as what's going to happen in your future. You might need to be in there for 2 more days. You might need to have physical therapy. When you go home, you might need to go to rehab. The predictors are all in the actuarial table that goes with that code. So what happens is when you are in there and you're under observation, you probably have a multitude of things going on. My mom was always observation. Oh my goodness. And so, and that was one of the reasons why she switched over to a Medicare Advantage plan, because with Medicare Advantage plans, in order to trigger your rehab, now it has to be under the managed care, your doctor has to agree, all those things. And there's a few more steps with the Advantage plan. However, she was always able to get into rehab and not have to pay it herself because she had either interpretation, either the inpatient or the observation. Now, people that have a supplemental plan, that high G plan, oh my gosh, they need to have that hospital plan for the rehab, and they need to have the home care plan because there is a gap. There's a huge gap with the supplemental plans, and people don't think this. They think, oh, it pays for everything. No, it doesn't. And so
Even a plan cheat.
yes,
Okay.
so any plan that's a supplemental plan, the gap that's there is the one where when they go in for a hospitalization, and if they are even in there for three days, 3 nights, the whole thing, shebango that Medicare requires, and they think I'm eating the same food as the person next to me and person down the hall from me, and I'm here, I'm inpatient. No, you always have to ask, what's my status? Am I inpatient or I'm in observation? Because I'll tell you what, observation means it's billed under Part B. And when you go to rehab, they're going to say, oh, I'm so sorry. You were billed under Part B. And they might not even say, I'm so sorry. And they'll say, stroke the check for $26,000. And you have to pay for your own rehab. So that's a huge
Between the
difference.
supplemental
Mhm.
plan, the Medicare supplement,
It's
and an Advantage plan.
right. Because I explained to everyone, okay, here's your basic plan. Like when I'm looking at this, here's your basic plan. This allows you to upgrade. So, you're at the basic level here. Now let's upgrade you and avoid these situations that happen. So again, the way that it works is with a Medicare Advantage plan, doesn't matter if you are observation or inpatient, you can, if they say that you need it, you can advance to the rehab, or you can advance to home health care. And then with a supplement, oh my goodness, you have got to be in that inpatient status. So case in point, you guys are.
Question of mine, you have to be in the hospital to trigger rehab.
Yeah, you have
covered.
to be in the hospital,
Yeah.
3 days, 3 nights. And so it's, I think it's,
Through the 3 days.
hold on a second. What is the definition of hospital stay triggering a rehab stay? Inpatient care, staying in a hospital, clinic overnight, a few days or weeks, 3 days. So
3 days
That
inpatient.
was my
Okay.
3 day.
Mhm.
That's what I always would say to clients or their family. Their loved one is in the hospital and they're kind of there, and they're there just about 2.5 days. And the hospital would say, we're going to release you. I say, you tell them I'm not going anywhere until I've gone through my 3 days.
Right.
Because your 3 days is what triggers
Triggers.
your ability to move forward. If they keep you in there, observation, or if they
Right.
keep you in there for 24 hours or 48, you are not triggering that. So 2 days, and that's what they like to do to a lot of elderly people. Oh
Mhm.
my God, I'm gonna be one. So, I am one, I'm an elderly person. Those, you've got to know how the system works,
Mhm,
and
you
that's
do,
why
yeah.
brokers are important.
Yes,
They
Yep.
really are, because they get an opportunity, just like what Dr.
reach,
do.
Kathy.
That's
John.
right.
You know, we keep abreast, we have
Mhm.
to study, because everything changes, right? So we
Yes.
have to know what, and how to best provide and position our clients so that they get the best out of the programs and products that we want.
So
Yeah,
this is
definitely.
this is what happened when mom switched from the supplemental side to the advantage side. Okay, so mom had a million things going on. Okay, so she had ileostomy, which is like a colostomy bag, but higher, and so she had that. And then she also had kidney dialysis for almost 4 years. And then she also had breast cancer. And so she had the port and the whole thing. Oh my goodness. And she was allergic to everything. Now I look just like her. I hate that. So I'm like, oh no. So anyway, what happened was one of the times mom was over at the hospital and she was not wanting to do anything. I mean, she was not even wanting to try to go to the bathroom. And I said, Mother, you need to try. They need to see that you're willing to try. Your attitude is everything. They want to see that you're compliant. You got to play this game. So dad said, set her up, set her up. And I'm like, so I propped up her pillows and I put lipstick on her. And she's like, what are you doing? I'm like, I want to make you look really good. So she's like, oh my God. She just felt horrible. So the doctor comes in and he goes, Jane Finestead? She goes, yes. And I'm like, oh, here we go. And I said, Mom? And she goes, yes. And he goes, how you feeling, Jane? And she goes, never better. But I'm like, oh my God.
That's the right.
And so I'm like watching this because just a minute ago she was all, ugh. And so all of a sudden she goes, I think I'm going to try and go to the bathroom. I'm like, oh, here we go. So she needed a little assistance to go to the bathroom, but she did it, and I could just, she just, we just kind of bearing the pain or whatever. She gets back in the bed, and so he's talking to the hospitalist, and then the physical therapist is there, and they go out to the hall, and my dad walks around the hall, and he goes, gentlemen, what's her status? They go, inpatient. And he goes, fantastic. Because if she would have had that observation status, we would have had to pay that $26,000 for rehab.
People know that. And that's why
Right.
brokers are
Mhm.
important.
Exactly. Otherwise,
Yeah.
there's no laws there that require anybody to tell you anything.
Exactly.
That's the crazy thing. It's like, okay, what you don't know is what's gonna get you.
That's right.
So, and I'm like, not on my watch.
For a while, I had a lot of clients calling that were getting dinged with that observation.
Yes.
Yeah, the even Medicare Advantage, so.
Yes, it's
Yeah,
it's something.
it's scary, right? If it happens, you
Yeah.
want to make sure you don't hit it. So that's
Right.
for sure.
Yeah, you've got to
It
get
Yeah, gotta
that.
get checked in.
What's my Medicare
It
code? And so
Right.
what's so funny, because then the story goes a little bit longer. Mom's in rehab and the doctor comes to see her, and it was in her care plan that she had to walk in 3 days. And so, but she didn't walk in 3 days. She walked in 4 days. And so the doc came to see her at rehab, and he's like, Jane, and she's like, yes, So, oh my goodness. And so he said, now, Jane, you didn't walk in the 3 days. She said, I know, doc, I tried. And he said, but you did it in 4. And she goes, you knew I wasn't going to walk in 3 days. He goes, oh, Jane, I just liked your style. And then walked away. I'm like, it's that arbitrary? You got to flirt with the doctor in order to get your way?
It is important.
People are people.
It's true. Yeah.
So shortly after that, she said, I'm switching over to the Advantage plan. I want to make sure I'm going to that rehab no matter what, even if it takes a rigmarole to get there. Oh, isn't that crazy? So, okay, so we've got the hospital plan here that can, a hospital indemnity, the home health care plan. Let's talk about this. And I put down the description of what Medicare will give you. This is really misleading. When you look at the Medicare and U book and you look at the book for all the companies, they say home health care 100%. And the question is, home health care 100% of what? 100% of what I'm going to tell you that they do.
Good point, because,
Okay.
yeah, there's,
This is what they do. Now, people will argue with you. I will tell you, I've had the argument. Oh, Diane, my mom had a bath aid. Okay. When did your mom have the bath aid? It's before 2013. It's before the Affordable Care Act came into place, because they took $78 billion from the Medicare fund for home health care, and they put it into the funding for the Affordable
oh,
Care Act.
that's what happened.
We are
78
one.
billion.
Marketplace and Medicare, we are one. We're under CMS. We're one, folks. So, so what happened was they said the bath aid, that'll go to hospice. The occupational therapy, you're really only gonna get like one of those, and that'll go, and then absolutely no custodial care. Not someone to cook, clean, anything like that. Nobody does that in the government, unless you are a POW or you are a veteran and can qualify for care under the aid and attendance benefits. And we happen in St. Louis to have one of the largest providers for aid and attendance in the nation is here. And she used to work for J. Berg and Associates, the owner, who's now passed, but just an amazing, amazing thing. So we can talk more about that, because I can go into a very deep dive of all of the veteran services that we have in St. Louis, and all of the places that we actually serve, they serve, who have served. And so if you want that as a side conversation, we can bring that up. But when you look at home health care, Medicare has 2.5 days, or excuse me, a 21-day episode. So how it works is you're told by the social worker, you're either going to go to rehab or you're going to go home. And it could be home care, and it could be rehab, then home care. It could trigger both. Okay. So especially if you're a fall risk. That's who is really going to get that service when they're coming out of the hospital. Now, what also happened, and this is really important to know, this happened a couple of years ago. We're looking at probably right before COVID. So in the late, 2018, 2019, that era. What happened then was anyone that would have a knee replacement, a hip replacement, they would no longer receive a hospital stay or rehab. They would be sent home directly for outpatient surgery. And so the cost for that went into the outpatient instead of the hospital overall costs, because it was outside the hospital. So it was a way to save Medicare a lot of money. And so those that are the exception are the ones that have a triplicate of morbidities.
They have to
So
have 3 health or morbidity issues. So for instance, diabetes, they have they have a heart condition, and they have a kidney condition.
Yes.
So they would have to have all 3 of those in order to
typically to have a hospital stay with a knee replacement or a hip replacement, because that's why they're trying to make sure that you're completely healthy otherwise, when you have your hip and your knees. So it's become much earlier of a person to get replacements. And so you see between the ages of 65 and 70 as the time that people are getting hip and knee replacements on Medicare, instead of at age 75 where it was before. So it's affecting more people, and now they are not able to have the home health care, from Medicare.
Okay.
The younger people too, that makes sense then. I knew
Yeah,
a younger
younger-
person that was 50-ish and
Yeah,
was in a
50.
boating accident and had to have both, and I helped him through both of them,
Yeah.
went right home. I just thought that was typical, but it was major
Yeah.
surgeries on both.
Yeah.
So,
So the amazing thing is that home health care, you know, when you're on, when I was saying, if they stayed on that group plan, you know, if our scenario of that woman who is, you know, turning 65, has the husband who's, you know, 5 years younger, and she stays on that group plan, looking at that group plan and seeing, okay, how much home health care do you have in here? And is it skilled care or is it private duty home care? So home health is skilled care. Home care is the private duty person.
Private duty.
Okay.
all right.
So we have, so Medicare, under Medicare, it typically says, okay, Medicare, you're gonna have a 21-day episode of home health care. There's companies that they specialize just in that. That's what they specialize in, and they usually do not do the private duty at all. So most hospitals have that home health component. And then there's some large national companies like Amedisys is popular throughout the country, that type of thing. Any companies that I mentioned doesn't mean that they're great. It just means I know who they are.
Feel free to
Love
send
you.
her a retainer. If you
Love
wanna
you.
open up your checkbook.
Disclaimer time, disclaimer.
Right.
Okay, so PTOT, 28 minutes twice a week. PT, you get
28
that,
minutes.
28 minutes, and it is their paperwork has to be done within the 28 minutes and they have to be off to the next person. Now, I will tell you, this is terrible. But if you've ever seen the person in the car that says home health care on there and they're sitting on the side of the road and they're doing their paperwork, guys, that typically means they don't like that person in the house and they need to get out of that house and do their paperwork before they get to the next person. I want to be that person where they're like, I can't stay any longer. This was so
Yeah.
much fun.
She was like all
And
my
then you see
people.
the problem that they've been basically worrying about.
You're
We
next,
gotta find
you're
here.
next person. Oh God, you gotta play the next for 5 minutes for Diane. She wants to hug on us.
I'd like you to go back on one thing just for clarification. I think I know, but I've always wanted that clarification. If an individual is in the hospital, either they've been there on a on PTOT, right?
Mhm.
So we are saying that Medicare will cover 21 days of that particular.
It's a 21-day episode. So
Okay.
it's like, that's the segment of time that all your appointments are gonna come through.
Okay,
It doesn't mean you're gonna see someone every day. It just means that that's the
Okay.
segment of time. So what happens is, to
for
open the,
occupational therapy or for physical therapy.
and it's physical therapy first.
Okay, physical
Because
therapy
they
first, okay.
order the occupational therapist visit, a consult.
Okay,
Okay, so typically what you'll see is the nurse comes out to the house from the home health company, and it's a RN. The RN will then assess the home, set up the medications, see if there's any grab bars that need to be added, any safety measures, any rugs that need to be, you know, put away. So she's creating, or he's creating, the pathway to safety.
Okay.
And so that's the opener. Then they'll leave a booklet, you know, just like this. They'll leave a booklet and they'll have a log, and it'll say the name of the person, the date, the time, and the description of service. That log is what you're gonna need when you have private, you know, home health care insurance.
Okay.
So that's the log, because that's what you're gonna send in order to get money back for those services. Okay, now you're probably wondering, what in the world did she just say? You get money if you have a private home care policy, a short-term home care policy. You get money based on the services, even if they are not a private duty service. It's based on, if you have a nurse come into your home, you're gonna get the nurse amount that day, depending upon the plan that you have. So I'll
so
go,
is that considered your plan of care? They've put together the plan of care
Mhm.
for that individual. They logged all the things that's required. That's the RN that's doing that.
Right,
correct?
right, the RN, and she sets that up, so when physical therapy is
Okay.
ordered to come in, then physical therapy logs in the book that they were there and
Gotcha.
what time they were there from, 1 to 1:28, or so, whatever.
Okay.
And then typically you'll see twice a week physical therapy for 28 minutes. And then they'll order an occupational therapist to come out. And they'll come out and usually they usually come out the second week. So you're usually doing pretty good. And they'll say, oh, you're doing pretty good. Unless you have problems with fine motor movement and you might have temporary or episodic or permanent neuropathy that could
Yeah.
impede you from reaching your goals. So then it's a matter of the fine motor movement that you can pick up things, you can feed yourself, that type of thing. So that's what the occupational therapist is looking
Okay.
for. Mhm. Speech therapy also,
That's very helpful. Thank
after
you.
after a stroke, speech therapy, they're looking at that too, that your speech is coming back, that you're able to communicate for yourself what you need. You understand how to make a phone call so that you can call 911. They're looking at all of those things as well. So speech therapy is hardly ever involved. Hardly ever. I mean, it's almost like a unicorn. So, so then what you'll see is if there is wound care or an infusion that's needed, those are the two that aren't typically taught to a family member or or friend to administer. That's typically when an RN will come out to the house. You'll see another
For
RN visit
for
besides the
infusion
bookends,
here.
infusion or wound care. That's really important. Now, the RN is also there to help order if there's a certain bed that you need to have, if there's a lift, if there's a Hoyer, anything like that. So that's when, so the family to be there when the RN is there initially, or the friend, whoever that person is, whoever your tag team person is, have them there at that meeting.
Okay.
Okay, that's really important. And then also, if they have a home health care plan, the home health care plan can actually go to the hospital and meet with you can have them meet with the social worker there at the hospital. And so they can transfer that information and that dialogue and all of the medical records, based on your release. And, if you're the policy owner. And so they can have that conversation and they can have things already set up in your home. But
nice.
again, if you don't have the policy, that's not happening. And what also can happen with that policy is that the social worker is there. You can hire a social worker with your money. And what we did with Dad was, my sister was in Indiana, my brother was in Colorado, I was here in St. Louis, and they do their rounds as doctors, typically, in the St. Louis area at 7:30 in the morning. So I was able to be there with the social worker that we hired through the home health care plan. And then that social worker with me interpreting everything emotionally, imagine that, emotionally about my dad. Oh my gosh, I was very emotional. And my sister not being in town and my brother not being in town and asking me all the questions. I was able to say to that social worker, could you talk to them? Could you say what's really going on in like layman's terms here so I can deal with the fact that my dad is not well, because it was overwhelming. And you don't know, that's the crazy thing. As women, we think I can control this thing. No, you can't. Not when you love someone. It's just you can't do it. And so thank God for that. But again, you don't get that social worker added in to be the interpreter unless you have the home health care plan.
Right.
The basic is it's a 21-day episode. The nurse comes out to the house. They set up the medications. They make sure that the rugs are all picked up. They make sure that you've got a pathway to safety. And then they order a physical therapist to come out twice a week. They're there for 28 minutes to do their paperwork. And then you might have an occupational therapist come out if you need help with fine motor movement. But usually they say you're just fine. And then 28 days later or 21 days later, the nurse shows up again, closes up the case, and you're done. Now, I'm telling you what, that's not someone to get you in and out of the bath after you've had a knee replacement, a hip replacement, even a shoulder issue, with, oh my gosh,
Yeah.
it's horrible. And so any of this stuff can happen. So we've gone from the statistic prior to when they changed all this, the statistic used to be that it was like 1 in 7 was going to need to have, short-term home health care. And now it is 6 and 7.
I believe
6
it.
and 7.
6, 7.
Right. 6 and 7. 6 and 7.
Okay, 6
I
and
mean,
7.
like it's
Yeah.
a 94% chance
You're gonna need
you're
help.
gonna need to have
I
help.
believe it.
So, okay, so case in point, so myself, I trip, I fall, and I break my leg, and it's just a little fracture, and I'm thinking I'm fine, and I'm not fine. I was told, you cannot put any weight on your leg, and I'm like, what? I don't know for how long? You're like 2 weeks. So there's this little lip into my shower. I couldn't get over the dang lip. So I called, got myself a nurse through my home health care plan. I'm young, folks. I think I'm young. I was really a lot younger when this happened 7 years ago. But I mean, it was, I couldn't believe it that I needed that. I could not.
Needed help to get over that lip.
I couldn't,
Yeah.
well, and then I couldn't stand to cook anything.
Yeah, right.
And then I couldn't wash my clothes. And I'm like, okay, I'm not wearing this outfit for, 2 weeks of my life. It was just ridiculous. So I have all these people say, oh, I'm so healthy. Oh, that's good until you have an accident.
It's true.
Don't follow the ice, folks. Don't,
I just
walk
did
by a
that,
pool.
just rolled my ankle, and I'm very humbled. I
Mhm.
probably need to get it looked at. But
Oh
it
my
makes you
gosh.
realize, the house hasn't been cleaned and just
Right?
getting ready.
Well,
So
this is so on point and on time. I'm managing a number of different people, right? Family members
Yes.
who, my one cousin who's 82 has the home care plan.
Oh, thank
Plan
goodness.
B.
Oh, thank
And
goodness.
she's been complaining, well, her ankles are swollen and there's different things. And I said, I believe that your home health care plan that I purchased for you, because I don't know how to do these things. I think that there's coverage for that there. And she's up trying to clean.
Oh, no,
I mean,
no,
there's all
no.
kinds of things. So this is so
Oh.
appropriate
Mhm.
that you should be talking about that because she has the plan B.
Yes.
But the thing is, when I talk to her, I don't need any help. I'm okay. And then she wobbles down, It's so the idea that these plans are in place to help you live a little better life, not that you are, laid out, but that you can actually access these different levels of care. That's
Right.
something that I think people really will pay attention to. Now I've got something, a story to go tell her,
Mhm.
I don't want to see you up with that vacuum cleaner. She's down on her knees.
Exactly.
cleaning, And I'm like, how are you gonna get out?
That's the difference between me and her. I laid on the couch with the foot
Oh
up.
my
She's
God.
on her knees
She's
cleaning.
like,
But,
she's on her phone, she's clean. I'm like, what the hell are you doing? She's like, I want my house clean. She doesn't like anyone, if you walk in her house and you go to put your purse on her table, which her low down
Yeah.
table,
Yes.
that already has a tablecloth over it, she will just like lose it. Don't you put your purse on there? You've got germs on there. It's like,
Yeah.
calm it down. What is wrong here? So you put it over to the side. But I know, and I'm watching her go down. You know what I mean? There are
Right.
things that she didn't get her medicine on
Right.
time, all of those kinds
Right.
of things. So to be able to take our programs
Mhm.
and let people know the, I'm gonna say the real
The
life. Yeah,
practicality
the
of
real
it.
practical ways that you use this.
Right.
Don't just think of this as, I've just come out the hospital.
Right.
No,
You don't
it's,
require
my
hospitalization
gosh.
to have
Yeah.
access to this. I think that that's
I
wonderful.
mean, my dad, it was like, when I told him, I'm like, Dad, we need to make the claim for the home health care. We've got to do that because you can. And if you don't use it for a while, then, 6 months, all the money
It
that you
goes
spend,
back,
it'll
the
just
benefits
restore.
restored.
Exactly.
Yeah.
And so I told him, I'm like, Dad, we just need to make this claim. And so anyway, we had a private duty. We had the skilled care come out for one of the episodes, and then we had private duty come out, and he's like, I don't know why she's here. I really just don't know why she's here. And I'm like, she's here, Dad, because you, by having someone here telling you how good you're doing, then you're going to be able to know and have confidence to do it for yourself sooner than later. And he was like, oh, that makes sense. I said, plus you guys can play games and you can, cook the food, and you can tell her exactly, what it is that you might want to have done. He goes, well, do you think she would learn how to fold my shirts? And he's, military, he would fold them a certain way. Oh my gosh. Well, she learned, and she was so funny. She was so funny. She was like, when she learned how to fold her shirts, and she had them perfect, like one day, and she took a picture, sent it to me. She goes, look what I've done. And I'm like, oh my gosh, that's hilarious. I mean, she's like, your dad just told me the funniest story about you guys. And so they really did like become friends. And as he got better, and he did, get past the episode, he took her to lunch. She took him to all of his appointments. I mean,
nice.
so it kind of like turned into something, completely different, but it was just great. And he was like, he goes, Donnie, you just have no idea how great it is that she can wash my back. Your mother used to wash my back. He goes, I think my back hasn't been washed for 7 years. I'm like, oh my God, Dad.
That's funny.
I said, whoop, yeah, dirty back, Daddy.
The practical uses and the practical aspects of our coverage that's available.
Yeah,
I think that's
and it's a matter of
perfect.
picturing this, because I went down and I thought I was doing such a great thing. I made my dad lasagna, okay? And so I brought him lasagna. I'm like, I made you lasagna. He goes, well, just put it in the refrigerator with everything else. And I'm like, what are you talking about? And so I open up the refrigerator, and there's Monday, Tuesday, Wednesday, and then there's lunch Monday, Tuesday, Wednesday for Dad, because she did it.
Oh
She's
my
like,
goodness.
and so
Yeah.
and labeled it like Dad would label it, the whole thing, and I'm like, oh my gosh. And then I open it up, and I'm like, oh, there's protein and starch and fruit. Oh, that's my dad. It's
That's great to
hilarious.
know. I thank you for that.
Oh, it's so important. And people think that it's so expensive. That's the thing. Everyone thinks, oh, Diane, what does home health care cost? And the thing is that you can get home health care, a policy from the time that you're 45 and up. So you don't have to, you don't have to wait, because an accident can happen at any age.
I'm gonna get one as
And-
soon as I get, one with a plan
And it is
after this.
amazing.
So
Like mine that I have, I think I spend $42 a month, and I have $300 a day. And then I have, that'll pay for 360 days of care, but it restores if I just put it on the shelf. I only use it for a little bit. And then I also have $80 a day for an aid for 60 days, the first 60 days of my plan. And then because I take 3 medications, and they're all generic medications, each is worth $10 every single month. So I get back $30 a month. So my actual cost is $12 a month. That's all I'm spending.
my goodness.
So for the year, I'm spending $144 in a year. Okay, so that's crazy. think I did my math right. I don't know. That's Diane math. So anyway, it's just for less than $150 for me a year, I can have access to basically a pool of $112,000 that's restorable. Now, for a 65-year-old, what we're looking at is, for example, I had a 65-year-old and she said, Diane, I would like, plan C, I would like to have $178,000 of benefits. And then she also wanted to have another company's plan, which is a deluxe plan. And so what she is getting in benefits, she's getting $450 a day, and 150 of that can go for an aid for 350 days. And then the other plan, she's getting $450 a day, and then $100 a day for 60 days.
Yeah.
And so that combination, she has just shy of 300,000, or right around, hovering around $300,000 in benefits. Well, you think, well, how much is that? Well, she's going to get back $900 on the one plan, and she's going to get back $600 on the other plan. And so her cost is $1,500 a year, but she's going to get back $1,500. So for $2.63, we put on this rider on one of the plans. And if you send in your wellness on that plan after the first 6 months, every year you get back $150. So I told her, I'm like, you're going to make $150 on this thing. I go, you're going to spend $1,500. You're going to get $1,500 back. And then after the first year, you're going to get another $150 back. And she was like, you got to be kidding me. I said, no, this is why I'm so passionate about this, that it's affordable and it is necessary and you will use it.
Yes.
6 out of 7, hello. And so, and the thing is that they don't say that you're going to use it once. They say that 72% is going to use it twice. So that's amazing. So get your right knee done, get your left knee done.
Get
6
my
months
mom
later.
on it too right away.
I know, it's one of those things that is so outstanding. So the home healthcare piece, with short-term home health care, there's also another plan too that does a weekly amount, and they can say, oh, the weekly amount's going to be $450 for the week if you have 3 different visits within a week. That one's really popular too. It doesn't give back the money on the RX, but it's a very popular plan because, again, it's indemnity. When the money comes to you, it's your money and you're not paying taxes on that money. So that's really important. So then I always ask, go ahead.
On your home health care plan, when you make a claim, you continue to pay the premium? Okay, so it's not, once a claim goes in, that it is suspended, like a waiver of premium or anything of that nature on it?
No, you just keep on going.
Just keep going. Okay.
And the money from the RX comes back to you every single year. So it's your year, and then you have your amount, your maximum amount that you can get back. And once you hit that maximum, then you don't go beyond that for that year. But even if you're on claim for the home health care and receiving home health care, you're still able to send in your receipts.
I should be using mine.
Yes.
I have a plan. I'm like, oh my God, I have it for myself and my husband. I'm like, and we have our medications.
Yeah, you got to send it in. And so for those, so for those who have, well, only 17% of people send them in. And so, and exercise that benefit.
Right.
So what the neat thing is that, when you do send them in, they'll send you that check and then you can just deposit it and you don't have to claim it. So yeah, it's there. And you can, if you've forgotten to do it, like in the past years, you can ask for consideration. It doesn't mean that they will grant it to you, but you can say, I just recently attended a class and I realized that I have not been sending this in. Is there any way you can consider, consider going back and sending that in? We did that recently for a client. She just got $283. So she was happy about that.
Say that your medication doesn't cost you anything. Are they still going to get out of here?
Yes.
Really?
even at
Like
zeros.
you go in, to
Mm-hmm.
Medicare, and it's like, oh, how much is this? Like 0, you don't have anything, or it's $5 or whatever. What they are actually focusing on is the number of medications that you have, or what?
So they're looking for, when they collect that data, they scrub our name off of there, they
Uh-huh.
scrub, where we live off of there. But if, let's say, we're the big three, and Courtney, you're Aetna, I'm United Healthcare, and you're Humana.
Okay.
They don't call each other and say, hey, what are you gonna charge, a 56-year-old woman that lives in 63021, for a Torvastat. And, my price is $4.19 when I
Right.
send it in. They store that information because as Aetna and as Humana and as United Healthcare, I can call the company, the private company that has the home healthcare policy, and I can say, what are you charging for this drug? And then that's how they are able to set up their formularies and make sure that they're kind of right in the same price range as everybody. So they basically have two types of businesses going.
Mhm.
They have the home health care and the reimbursement, and then they also have the data that they're in the actuarial statistics on those medications.
Jeez.
I know, isn't that something? Because everybody always says, oh, it's too good to be true, it's too good. Well, this is what's really happening, and
It's
this is
happening.
and
but
this
you
is a
just you don't understand what you're seeing.
no, you don't
Right,
know.
You don't understand. what
But
you're seeing.
once I explain that to clients, and I'm like, well, this is what they're able to capture as far as the data, then they're like, oh, that's amazing. So it's it's
I love
amazing.
it.
So yeah, it's
We got money coming back.
oh, you do. I know. Eddie and I do too. We
Look
need to
at that.
send some.
My God.
We need to send some in.
It pays to come to this meeting. Okay, it truly pays.
Get your money.
Right.
I
If you're a broker, it really pays to come.
Oh, yeah, you gotta get your money. So anyway, so that's really the piece of the home health care, with the no custodial care. When I explain that to clients and I show them, this is, I always ask, how many medications do you take? Great, let's see if I can get you some free insurance. They're like, what? And I'm like, I know it sounds ridiculous, but let's just look at it. And then we get into the whole conversation like we did about the home health care and about, who really covers what and what they can expect. They always are like, oh my gosh, Diane, why wouldn't I do that? And I'm like,
Quick
yeah.
question, because I know you still have to go forward and I've been asking questions. So what about an individual that's a veteran? I know you said we're gonna get to it, or are we gonna wait? to get
No,
to
just
that?
ask,
Okay, so yesterday,
Mhm.
I was eating these cookies because a veteran
Uh-huh.
has a small little bakery, right? So I went over and we're talking and getting him ready. He's turning 65 for Medicare. We're looking at that. And I said, you probably need some extra supplemental kinds of programs. And he's like, I don't know, because I get everything through the veterans. I go to VA, right? I said, okay. And he says, I get all my medicines there. So he starts telling me all the things that he's got. I'm like, he pulls it up on his phone. These are all the medicines. I'm like, oh my God, you got a lot of medications here. And he says, but I don't have to pay anything. Sometimes maybe $2. He said, but pretty much nothing. He says, I don't know if I need to have the supplement, not the supplement, the Medicare Advantage plan.
Mhm.
I said, well, let's do this. Let's get all of the information about you and let's determine where we can really help. Now, I said all that because I knew I was coming to this meeting today.
He talks
You've
to
got to
the
get
audience.
your way through it. So, because I could not speak intelligently nor truthfully about how the veterans, how the VA works with Medicare Advantage plans, if you have one, all of that. I'm hoping you can open up the doors for me so that I can understand. And his wife has no health issues. She
Okay,
happens to be a 1 year older than he is. So
Okay.
she's already has her Medicare Advantage to me.
uh-huh.
And we just were kind of thinking about the other ancillary plans. So I'd love to hear once you get to that?
Oh, I'll get to it right now.
Oh, okay, a veterans benefit, because your dad was a veteran, right?
No, Dad worked for Department of Defense, so
okay.
yeah, that's where
Okay.
he ended his career there, with negotiations and contracts. That was fun. Whenever
Oh, interesting. Yeah.
I could
well,
never,
was somewhere
I could,
close.
I could never pull anything over on my daddy. He would say, "Diney," and I'd say, "Oh no." So, okay, so let's talk about the veterans. So my question though, for his wife is, can she access the VA benefits for the drugs?
I don't know.
Okay, so that's really the first question to ask, because I always think of the whole family. And so the way that it works for VA, and it has worked for several years, there's several Medicare Advantage companies that have a product just for the veteran. The two that are most popular across the country, one is sponsored by USAA, and that is Humana. In the St. Louis area, they have two Humana PPO products.
They have
For
both of them?
and they're PPO, and they're called the Honor plans. So they're the PPO Honor plans through Humana, and they're for veterans. The one that is popular also in the St. Louis area, and that one is the United Healthcare Patriot Plan. So HMO POS, point of service. If you ever see point of service, what that means on an HMO is that a provider could choose to use the agreed upon service amounts for Medicare instead of being an out-of-network provider. So it actually opens a person up to many more providers to choose to be friendly. So, which is nice. Okay, so of those two plans, so they're here in St. Louis, so let's talk about those two plans. If they wanted to be benevolent and they wanted to have, it's required that they have their drug plan through the VA, okay, or privately, that there's no drug plan in those plans at all. As of right now, this all could change on a dime, folks, but just as of today, hello, March 5th, 2026. So we're looking at the plan for the PPO. PPO means you can go both in and out of network. You can get up to $135 off of your Part B of Medicare. It takes about 3 months before you see it come through your Social Security, if you're not pushing the money to Social Security, if you're receiving Social Security. So you have to let people know it takes about 3 months, depending, regardless of the company. Now, United Healthcare has this HMO, and the HMO it is POS, and so there could be other providers that choose to use those that pricing structure, and that one can give up to $150 a month off of your Part B for the veteran. Then
$150 per month.
per month. Yes, that's why I was wondering about
I thought you were
the
gonna say,
why.
I thought you were like, maybe she meant per year. No,
So,
per
but a
month.
lot of people, Kathy, they ask about that, and the veterans are kind of like, well, should we trust it or not trust it, or, whatever. And the reason why they did it this way is if they would have done it a different way and gone straight through the VA, then the pie gets cut. And so
Okay.
then there wouldn't be that big amount of money to give back to the veteran. Okay, so it's really neat that they did this. So I love it. And so then what happens is on the HMO POS, you do get $4,000 of dental. And you can go in network and out of network, and up to 2,000 of that can be used for major services. And it's no cost to the veteran. And they also get the eye, which is the 300 in our area. So on the other end, you're looking at the PPO, and the PPO from Humana gives $1,500 of dental, and not as much as the vision. So it just depends on the situation as to which one you would use. So the HMO requires referrals and that type of thing, and the PPO does not. The HMO requires that you name a doctor and that doctor becomes your quarterback. The PPO does not. The HMO through United Healthcare also, it's interesting because if you have a scenario, they have a $4,700 maximum out of pocket for the St. Louis area. So when would they use this and not use the VA for their medical? Because you're really looking at the benefits is what they're getting, and then you're looking at the money that they're getting back on Part B. So that's fabulous. But when would they actually use the medical and not go to the VA? Because they can still have their doctor at the VA, they can still have the assigned doctor at the VA and all of that. It's not required, but they could. But for example, one of my clients, I went to his home and he said, Diane, I've done this surgery twice through the VA, and it was shoulder surgery. And one hand he could reach over his head, the other one he could not. And he said, they are not willing to do the surgery again. They're not going to approve the surgery for a third time. I need to be able to do the surgery on my own. And this is kind of a wacky doodle type of thing, but these things happen to us. And we're like,
Right.
oh my goodness.
One-off situation.
I know,
all the
like,
time.
hello. We're I'm trying not to react. I'm like, oh, okay. Well, this happens every day. And so I said, well, how much is the surgery? And he goes, from what I can find in the St. Louis area, the surgery is going to be $87,000. I said, no, it won't. No, it won't. And at that point in time, that year, Humana was the one that was the most, it was the best plan, for the dollar. And they had a maximum of $6,700 that you would spend. And I looked at him and I said, 87,000 or 6,700? He goes, what? And I'm like, yeah, and they're gonna give you some dental, and they're gonna give you the vision, and they're gonna give you this, and they're gonna give you the money off, on your monthly, your Part B. And he started crying. And he was like, oh my gosh. And I said, yeah. So that's where you just have to ask that veteran, what possibly could be in your future that we need to account for, this year. We could always revisit an Advantage plan every year during the annual enrollment period, which is October 15th through the December 7th. And if they have the Advantage plan, then we can revisit it per, them coming to us during the open enrollment period, which is January 1st through March 31st.
Well, what's amazing about this is talking to him, he will turn 65 in May.
Oh, perfect.
Right, perfect. But he said, I know I can go to the veterans and get this and that and the other. He said, I'd like to have my own private doctor sometimes.
That's perfect.
He said, if I could just have my own private doctor that I can go to, that if I'm not feeling well, I'm cold or whatever, I can call. He says, I've never had a private doctor.
Oh, that's awesome.
And so I thought, this is perfectly timed because I'm going to Professor Diane's.
Professor,
I will understand because I looked it up and I saw the Patriot Plan, United Healthcare. I don't remember if I saw Humana. Maybe I did. It didn't. I probably did. But I did recognize, I think the Patriot Plan is non-commissionable. That's okay.
It happened to me.
But
I
if
had
you think
sold
about
it,
it,
then found out.
it says non-commissionable. I'm going, I don't know. But the other thing is the other benefits that are available. His wife has already, she's already signed up, I get paid. But I'm thinking about that and I'm trying to weigh what's the best way, because it's not me, but it's the best way. And when he sat there and said, I just like to have the ability to go to my own doctor.
Mhm.
I thought, I don't care if I don't get paid on this thing or not. I just want this.
But the thing
St.
is
Louis,
that the home health care, he still
Yeah.
needs that.
Yeah.
And that's, and
And
my
we've already-
client that I
already sort
just,
of, I'm gonna say kind of strict the match for that. And she's saying we definitely are, because a year and a half ago, she was minding her own business and fell.
oh,
And
no.
so she had the boot on and everything. She
Uh-huh.
says, we need to have that because he's not taking care. He won't take care of me. Not that he
Yeah.
couldn't, but
Mhm.
he's now opened up his bakery, which is a
Oh,
really
right,
cool
gotcha.
bakery right
Uh-huh.
across from, if you're
That's
ever
cool.
down at Crown Candy, right across.
It's
the
right
street.
there.
Really?
Yeah,
Oh,
so the
neat.
Daily Drip. So just,
Oh, I love that.
yeah, Daily Drip. It's a coffee shop. They're open on Thursday, Friday, and Saturdays.
Oh, how fun.
And
And
that's
those
what
of you
he
who are
does.
not from St. Louis, Crown Candy is the bomb to get on.
They're
If
being
you like
famous,
candy and
famous,
ice cream.
famous.
okay,
All go.
You come
Ice
off the
cream is
plane, you go to Crown
amazing.
Candy.
I'm telling you. So anyway, looking at that, that's what I was like, I don't know. First of all, with him being a veteran, he has access to veterans benefits.
Mhm.
Will he be eligible? So I'm like, okay, I think that's one, because that's why I sent you and you answered me back.
Mhm.
So to have that, and then he said, even if I have to get my prescription medicine through the veterans, I'm okay with that. But if I could just go to a doctor that I feel, a private doctor,
Mhm.
and you think about that,
Yes.
geez, okay.
I know.
So thank you for that.
Yay.
That veterans moment.
Yeah.
Yes,
okay.
And
because
there are other plans. So
Yes.
check them off the rest of
Yes.
them. Yeah.
Because they still need the
Well,
hospital
then again, the
indemnity.
indemnity is
Uh-huh.
what I was thinking about.
Yeah.
right?
They still,
Because
he'll
he-
still need that, and he'll still need the home care plan, and then he'll also need the cancer
So,
plan too.
The indemnity, because he said, I'd like sometimes not to go to Veterans Hospital. If I have to go in the hospital, so if I have my private doctor and I
Mhm.
get a chance to go to a private hospital, right?
Yes.
He's already kind of mapped it out. He said, well, I
Mhm.
even know where I want to go.
That's
Okay,
good.
fine. So the indemnity, the
Mhm.
home care, he has been treated for cancer, but that's
5
been
years
over
ago?
5 years. It's over 5 years.
Perfect, he can get it.
He's eligible.
Mhm.
He and his wife could,
Yes.
because she doesn't have any. Okay, all right,
Mhm.
we've got everything, okay.
So, yeah, this is
So
what I
he's been taking
call
the
this.
tablet. He's been taking the tablet for
Mhm.
5 years. He said, but
Mhm.
I'm off of it now. He said,
Mhm.
because it's over 5 years. I'm going into my 7th year, I think he told me.
Yeah,
7th year.
yeah, that's awesome. So he'll really love that.
Oh,
So
making differences for people.
Yeah.
I mean,
in their
like,
lives.
like
Oh my God.
so, like my friend, she posted last night, I love it, that she's like, just do the right thing. That's number one rule, do the right thing.
Mhm.
Number one rule, do the right thing,
Do
thank
the right
God.
thing.
Mhm.
That's
The other
that's
thing, if you mention it to the spouses and say, you may not want to drive down to the Veterans Hospital, you may want to be close and go here, then the spouses a lot of times.
Yeah, they're
are
like,
Oh,
jump
yeah,
on that. They're like,
Yes.
you get something where you can go
Right.
right here.
yes,
You know?
yes,
Yeah,
it's so
well,
true.
She already had said, I'd like to make sure that we have something so he can go to a private hospital,
Yeah.
Okay, I'm sorry.
Okay, so we are
We're
gonna.
learning here.
Yeah.
We are
Yes,
gonna
it's a lot of good
pause right
stuff.
here and
Mhm.
take a break, and we'll be back in just a little bit. Thank you very much. We need like a song.
You know, fade out. Courtney will do it. She'll have something.
Thank goodness for Courtney.
Uh-huh. Hi, this is Diane Finestead Ellis, and it is March 5th. And oh my goodness. Oh wow. News of the weird. You never know what Kathy Conley Jones is going to show you online. Oh my goodness. And I'm here with Pam Berry
Hi,
and Kathy
everybody.
Conley Jones and also Courtney Hudson. And we are gathered today because we are going over a scenario of a woman who sent us a text and said, I am retiring at age 65. I have work in place insurance and I need to know if I need to get Medicare. My husband is 5 years younger than me. I need to know what to do about his. I have long-term care insurance. I have life insurance through my employer, and my mom also has long-term care insurance, and I need to know what to do. So we're going over all the different options that you could possibly have in your brain when you read that little teeny tiny text, and then you go, well, now what? Now what do we do? So we've been discussing, we did a deep dive at first into the two sides of Medicare, the supplemental side and the Advantage side, the good, the bad, the ugly. We also went over one of the three sheets. This first sheet is for the Medicare worksheet. And we talked about choosing your own Medicare plan. And then we also talked about the hospital indemnity plan and building that to your Medicare Advantage, or even what part to build, and that is the rehab to the supplemental plan, because we discussed at length that supplemental plans, there's a big gap there, and that is when you get an observation stay at the hospital, which is no account to you. You don't know if you're getting it or not unless you pay attention to it. And then you go to rehab and you find out you have to pay if you've had an observation stay at the hospital. So that rehab is important for both sides of those with Medicare. And then the home health care piece, the short-term home health care piece, is important no matter what. When you're 45 years old, or if you can get it earlier than that, get it, because it's pennies on the dollar. And it's certainly going to cover you for something that we know the government is not covering you for, which is anything that would be a short-term home health care need for you to recuperate at home, especially after you've had an accident or you've done something stupid like break your leg that you didn't intend to do. Or, it could be that you fall while you're playing pickleball and you hurt your shoulder and you got to go get, your shoulder surgery done, and then you can't put on your clothes for 2 months, 2 weeks. In just a short period of time for home health care. All these scenarios can happen. And then we talked about a veteran. And what is it like to be a veteran in America right now? We use St. Louis as the example because that's where we are today. And we talked about the veteran plans that are available for Medicare Advantage, and why a veteran might want to have that plan, what the cost is, which is really no cost to them. It's a lowered reduced cost typically for Part B. That's the highlight of that one. And they give you a lot of extra benefits as you are using your VA benefits for your drug plan, or it could be Champ VA if you have that, or TRICARE for life. They can get into those plans. So look at the previous video and you'll see the deep dive into that. So we're going to go into more of this page, this worksheet. So Courtney's going to show you this worksheet. Dun, 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 dun. She's been put on the spot. Put on the spot. Okay. So here we go. She's going to show you this worksheet. Now, what you're going to do when you talk to people, so you're not overwhelming them, is fold it and then cover it. Get their little book out and just cover it up so they don't see anything else as you're talking about it. So we covered the different kinds of Medicare that you can have. You can have Medicare Supplement, Medicare Advantage, and then we also covered the workplace insurance that they might have. Now, the second thing is, how do we shore it up? And cover the gaps. So we talked about hospital indemnity. And there's several companies that have hospital indemnity. We discovered that there's one right now that will give you back money for your RX. That's exciting. So that will defray the cost. And then now you're seeing these two pages, these two sides. So you just fold it in half. And that way you're not overwhelmed when you're seeing that. Then as I shared with Pam, I said, sometimes at this point of the conversation, my clients' eyes just glaze over. They're like, oh my gosh, Diane, that's so much information. And I just have them repeat it back to me, what they've chosen as their Medicare, why they've chosen what they've chosen to close up the gaps. And if they look like they've got the bandwidth, then we'll go into the next section, which is the section for home health care. If they don't have the bandwidth, well, then we will make an appointment right then and there, and schedule it in my phone and their phone, and I'll put it up here when we're going to talk about that next section. Okay, and so always check in with them and make sure that they're with you so far before continuing on. So we talked about the home health care and what Medicare will do. We talked about if they stay on a work plan to review that, and what Medicare would do, or actually not what Medicare would do, but what their plan would do for them for home health care. And then I always ask the question, do you have long-term care? And I might not have the conversation right then and there about long-term care. It's really worthy of its own conversation. But you want to ask them, do you have it? Have your parents had it? Have you had any experience with it? And then again, we would tell them about the reimbursement if they chose a short-term medical for reimbursement. And then you have the monthly premium here, minus the annualized reimbursement. Now, a lot of people say, Diane, how do you know the reimbursement? When my clients come to me for reviews for Medicare, I have all of their medications and I have all of their doctors. So I already have a pretty good idea ahead of time how much money they would be able to receive back per year. So I can see what kind of plan would be best and not cost prohibitive for them, or something that might even be no cost after they receive their RX reimbursement back. So I can make their day and say, would you like to see, quote unquote, free insurance? Everyone's like, oh yeah, sure, free insurance. And then I explain it, how you put your premiums in, and then with your RX, your money comes back either in full or in partial, and it offsets the cost. And then down here, it says the net cost per month, how they would feel it, and then what their premium would be, so that they know what to look for when their bank account statement comes through. So that's, of course, after you have that conversation of education about who pays for what when it comes to Medicare home health care. And you have the conversation letting them know that all of those appointments that come out to your home, they count for reimbursement. So some of the plans even have a $3,500 chunk of money that's given to you twice when you go on to claim for short-term medical. Now, that chunk of money that comes to you, not only from the reimbursement when you're on claim for home health care, and that you are also receiving your RX reimbursement, that chunk of money is really there for someone like my dad, who, when I was first taking care of him the first 2 weeks, I really wasn't working at all. I was just there for dad, and he felt really guilty about it. So if that would have been available at that time in the former plans, dad could have maybe put $500 on the table for me, and I would have walked in with a donut for him, and he would have said, kiddo, there you go, $500. I'm really sorry that you've had to, not work this week. And that's what it's there for. It's so that you do not feel guilty being taken care of and loved on by the people that love you. And it's just a nice thing, that $3,500. So that happens twice. So that's about $7,000. And what I will do is I will show clients the money that you've put in to equal $7,000 in premiums at what point in time. And usually it's like 25 years later that you've put in, $7,000 or something like that. But if you needed it tomorrow, you're going to get access to that $7,000 not only, and then also your $150 a day, or your $300 a day, or your $400 a day for your home health care plan. So, or it could be $450 a week. It just depends on how we do it. So the whole time, we're going to have a great conversation about this and make sure that you're covered. Then the next thing here is one of my favorite things to talk about. Now, used to not be, and that is a cancer plan. So it's 1 in 3 men will have cancer, and 1 in 2 women will have cancer. So 50% risk we're looking at for women. And it's not that it is genetic, like people assume that it is. We have more environmental cancer now than we ever have had before. That's what we're looking at.
Yeah.
Even last week when I was in Washington, we had the speaker come in from the FDA, and he was showing us about our food and our food supply, and that we have 800 dyes that Europe does not have. And so they're moving to get rid of those as quickly as possible. And I thought, holy cow, there's a lot more here than it has been let on. So I know that this is important, but it was hard for me to have this conversation. So I'll tell you the story. Bob Berg, who was my co-opetition back in the day when I sold long-term care insurance, when I went back into insurance again, I walked into his office and he said, "Hi, Diane." And of course, the person thought they were going to introduce me to him. And Bob put his arms out and said, "Well, you can't beat him, you join him." And I'm like, "Oh my gosh." And he hugged me and he said, "What are we doing?" He goes, "We doing business today?" And I'm like, "Yes, we are." And so I told him, I said, "I really want to come back into the senior market." And at that point, my under 65 company, which is now Compass Health Consultants, it was formerly Healthcare Solutions Team, they said, "We're never going into the over 65. We're never doing it." And then 3 years later, they did. But in the meantime, I had had my hug with Bob and my handshake, and he said, "Come on, let me show you how this is done." And there had been several things that he showed me. The first thing that he showed me was the short-term care. And the reason why he showed me the short-term care was he said, "Diane, when you went out and you sold people a long-term care insurance policy," this is like back in 1998 to 2003, 2003. He said, he said, "You told them the first 100 days is going to be covered." I said, "I sure did." Because "It's no longer covered." He said, "You might get it with rehab, but most people only get about 20 days. And so that's why Medicare just covers the first 20 days on both sides of the river, the supplement and the advantage." And I said, "Oh my gosh, it's like I lied to my clients." He goes, "No, things changed. So you need to go back and see all of your clients." I go, "See them with what?" And he said, "See them with a short-term medical insurance policy that doesn't change their life to pay for it, but will change their life if they have it in place." And I said, "I need to know more." So of course, the first thing I did was buy it for myself and to understand it, because that's the main thing. You got to ask your agent, "What policy do you have? What do you really like?" Because put your money where your mouth is. And so I did, and I bought it for my sister, I bought it for my dad, I bought it for my mom, I bought it for my aunt, I bought it for my uncle, I bought it for my cousin. Who else can I gift it to? And so, I mean, it was just like, oh my gosh. And so then I went out to see all of my long-term care clients, and they were so happy that I was telling them about this gap and educating them about how to afford, covering it. So fast forward, this cancer plan comes up, and mom had just passed away. And from cancer, that was the straw that broke the camel's back, which I couldn't believe it. But she was the one that told me. She said, "Di, I think this is it. This is, now that I have cancer, this is gonna get me." And I didn't believe her. And then she was right. It really did. And so I was in no way, shape, or form ready to have the conversation about cancer plans. And I walked into Bob's office and he said, "Okay, this plan gives us hope." I'm like, "Oh, right on. Whatever. This is a cancer plan that gives us hope. Okay, I've heard it." And he goes, "No, Di, I mean it. You get into that, go get into that meeting right now. It's right down the hall. Go get in that meeting." And it was with Michael Agundi, and he's from GTL, Guaranteed Trust Life. So I walked in there, I walked in late, I was in the back of the room, and then he recognized me. He said, "Oh, Diane, I'm so glad you joined us." And I'm like, "Now I can't leave. Oh, shoot." And so I was there and I thought, what's he gonna say? Well, here's the deal. All cancer plans give you money. And they either have a particular amount of money they give you per what happens to you during your cancer journey, or they give you a lump sum of money. And most cancer plans can give you up to $75,000. Now, a lot of people will say, why do I need $75,000? Well, you want to pay off your house for your spouse? Okay, it's a one in two chance. It's a 50% risk. You might as well just do it. And it's very inexpensive to do it. And the younger you are, the lower the cost. And so you might as well just take that risk right off the table. That's what you do with insurance. You put it to the insurance company because it's allowing you to keep more money in your pocket. That's based on the risk. Okay. So I'm like, okay, I get this, I get that idea. And I had that idea in my head. And then he started talking and he said, well, this can cover $500 three times in the policy. And it's for skin cancer. And I'm like, well, nobody covers that. And then he said, and then you can send in your wellness every year and you can get back $100. And I'm like, okay, what else? And he said, and then when you're on Medicare and you have cancer, they will test for 400 genomes, your body, your genetics, and it'll be stages 3 and 4. And I thought, well, that is not good. And he goes, Diane, paying attention? And he said, we test 19,000 genomes. And we test at the beginning of your cancer journey. You give us a sliver of your biopsy. You send it over to the TGen lab in Arizona. And that's where Cindy and John McCain had their cancer journey. He goes, that's where Mayo Clinic sits on the board. That's where PetSmart sits on the board. He said, because doggies and humans, we were looking at all different kinds of cancer. And I'm like, okay. And he said, and the 19,000 genomes is going to indicate how much radiation and how much chemo and the latest and greatest in the pharmaceutical industry, as well as any other treatment that your body can withstand based on your scientific makeup. And I thought, okay, this man has my attention. How much is this? And so I asked him, I said, well, if I just waited and I didn't have a cancer policy and I just paid for this out of my pocket, how much would it be? He said about $18,000. And I said, oh my gosh. I said, well, how much is a policy? He said, well, here's the deal, Di. If you have a $5,000 policy, just a $5,000 policy with us, then you will qualify for the 19,000 genomes to be tested. And you also get the counseling. He said, the value of it is also this. You're getting an outside opinion outside of your network. He said, remember, when you deal with networks, they deal with audits. So if someone has your propensity of needing care or needing to spend money, they're going to put you in a category and that network is going to suggest, based on that information, that you have that same treatment that other person had. And I said, so what happens with you guys? He said, we come in and we share what we've found based on you, and then you can have an informed decision based on more information. I said, how much is this thing? He said, how old are you? At the time, I was 54. So he said, it's $32 a month. I get $5,000 when I have cancer. I get the testing that's worth 18,000. It's 19,000 genomes. I get the counseling. And then I also get $5,000 again. If I get cancer again, I get the $500 for the 3 skin cancers with the life of the policy. And every year I get $100 off. So it's like I get 3 months for free every year. And the plan has never gone up in price. So that's the entry level of that plan. So again, I say to you, who in the world wouldn't want to have that plan? I don't know anyone that wouldn't want to have it, because that's how much a medium pizza is. So, see, I equate everything to food. Which will probably give me cancer. Sorry, pizza industry. But true. So isn't that amazing?
Yeah,
Okay, so
ready to
questions.
get one.
I know,
Just
it's
wanna-
like, I have
yeah.
to have that. You have
Right.
to have it. It's so important. You know, when you think about it, I'm like, oh my gosh, it's so important.
Is there other underwriting?
They just look back and they say, okay, you haven't had cancer. They might ask about heart attack and stroke. They might ask about, medication. They might ask about, but really they want to make sure that you haven't had cancer for 5 years.
All right.
So, and that's how most of them are, even with, but the GTL precision cancer is the only one that has that component of the 19,000 gene testing. Everyone else it's money, and money is good. So, for example, I had a client and he said, well, how much is Aetna's plan, Diane? And he's like 65, and his plan for $10,000, he wanted a $10,000 whole life insurance policy and a $10,000 cancer policy that had reoccurrence on there that would pay again the 10,000. So in the St. Louis area, we're looking at for that 65-year-old man, it was $74 for the combination of the two. So I mean, it just
Yeah.
makes
It does. Yeah.
it's just one of those things where you're just like, oh my gosh, let's just get this
Get it for everybody. I could see why you were getting it for everybody.
Let's get this in place. It needs to happen. It needs to be done. So because there's nothing like it. The one that had the precision one, but the money one is great too, because it was one where Eddie said to me, my husband, he was like, now, honey, if you got cancer, he said, I would be so sad. He said, I would be able to function. And I go, would you function better if you had $20,000? And he goes, yeah, I think I would. I go, would you feel a little better about things? You wouldn't have to worry about moving this or that, or who's going to pay the car payment, who's going to pay the house payment, who's going to pay the health insurance. And if you just knew I got 20,000, I got 20,000, and we're fine. And he said, what I really would want though is that if you wanted to go anywhere in the country, honey, or I wanted to go anywhere in the country to go see a certain doctor, we could. And I said, yeah, that's it. I said, and then you've got to pay the VRBO and, or stay in a hotel. And he goes, I'd want to stay in a VRBO. And I'm like, okay, then with $25,000, Some of those are expensive.
Do it right.
Oh my gosh, you could go out in style, or, if you're gonna deal with something really major like cancer, make yourself comfortable. That's what I say. Oh, man, because those drugs, geez, the cancer drugs they're wonderful, but man, they're so expensive. They're so expensive. And they have the foundation coverage sometimes, but sometimes the window closes before the next window opens on those foundational drugs. And you just, how do you fund them? And that's where you see all those GoFundMe's and that type of thing.
Yeah, you do.
Because it might have just closed and they're waiting for another foundation to
I
open.
was wondering why.
Yeah, isn't
with
that something?
insurance, you see so many.
I know, because
So-
the foundation, sometimes they'll have the money and sometimes they won't. And then all the companies that have that, they will, they'll let them know that they're not open on the foundation side to pay for that. So yeah, so you've got to have that chunk. You got to have that chunk of money. So with cancer, because if it's getting worse now, it will only get worse later. So so that's my take on that. So your questions.
50 years old, you said, or was it 45 on how old you have to get one?
Any age.
Okay. Any age, all right.
Any age. It can be any age. How about that?
Yeah, that's great.
I know. It's like little kiddos, get that life insurance when they're little kids. You can help pay pay for their college at that point. That's a whole other strategy that we'll get into tomorrow.
In the underwriting for approval for the policy, there are going to be some pre-existing conditions that they will indicate. I think I heard you say that if a person had had cancer, but it's been beyond 5 years,
Mhm.
that they would be eligible. Is that
Mhm.
correct?
Eligible to apply.
Is there
Mhm.
any other conditions if a person has AIDS, or they have a heart condition, or they have a kidney condition? Are there other areas that basically prevent an individual from being able to purchase the policy?
It depends on the company. So that's why we have, as brokers, that's why we have several companies that we would look at. The interesting thing is that we didn't talk about with the home health care plan. That one is easy underwriting. It's called relaxed underwriting.
Mhm.
And so some of them, when it comes to the cancer policy, some of them have relaxed underwriting, and they just ask that 5-year look back question. So that's interesting too. But relaxed underwriting means that there's 3 questions, and they're going to say, can you do all your activities of daily living, by yourself? So bathing, dressing, toileting, transferring, continence, eating. Are you currently in a nursing home or receiving home health care or receiving physical therapy outside your home or in your home? And then they'll ask, do you have any other plans that are in place right now? And so those are the relaxed underwriting questions when it comes to home health care. And the relaxed underwriting questions are very similar for cancer, but they do ask that, that you haven't had cancer in the last 5 years. So it's
You
really,
would say that. I thought I'd just get it out.
I'm so glad.
It's important. And I guess it's another question, and it's really sort of a trick question, but more so, when you're working with a broker, they're not looking, they're not looking at one company, but you're looking at a variety of companies. And so if you have the facts about your client and you bring that to Diane,
To Kathy, to Pam, to Courtney.
uh, the most important thing is to do your homework with your client. Ask them the questions so that you don't get their hopes up because you don't know the parameters of their health care. So you always want to have I'm going to say a conversational type of a interview with them, so that it's not like, well, let's check this. Have them talk to you about things that are important. And then once you put those down, and a lot of insurance carriers have a pre-licensing, not licensing, a pre-approval sheet where you get their age, you get all of their information, all of that. And then you send it over to the broker and says, who would be the best for this particular client?
Right.
Would you agree?
Absolutely.
Okay.
And that's so important to have that. And
Yeah.
so we call that the gathering sheet. So the gathering sheet. And I can make that available for anyone. It's as pretty as this.
I'll take it.
Which is important. So I would say, we've now covered, the Medicare worksheet, and we can deep dive into different products tomorrow if you guys want to. But that pretty much covers this one. But remember, this person that contacted us is going to be 65, and she married a young one. She's got a 60-year-old husband. And so we need to figure out what to do with him. So that's when we're looking at the next sheet is the ancillary plans. And we're just going to dig into this for a minute. And the ancillary plans, and they sit on top of all your medical choices when it comes to ancillary for the under 65. Now, what's really cool is the 65-year-old and the 60-year-old spouse, they can both have a hospital indemnity. You do not have to be on Medicare to have a hospital indemnity. They can both have the home health care. They can both have the cancer policy. So don't forget that this can be for the spouse also. And remember, She mentioned her mom who has
Mhm.
long-term care. This can be for mom possibly too, based on, the underwriting and the underwriting questions. So really, when you received that text, you received 3 clients. Boom, right there.
Just
We're,
right there.
we're not even talking about, the referrals and everything, because they're gonna love you.
Yeah.
So you have here, just briefly, so tomorrow when we get back together, we're gonna talk about this under 65 chart. We're gonna talk about this for like the first 2 hours or an hour and a half. And then we're gonna talk about this chart, and that is the short term, which we've covered today, but we're going to go into long-term care and hybrid, and then the blank page, which is for life insurance. So
Good.
yes, so we have tomorrow we're going to look at ancillary plans just for the under 65. Now that would include accidental plans, fixed benefit plans, and in-home care, which we've talked about today, dental and vision plans, so that you know what you're talking about when it comes to that. And then you have 3 choices here for that under 65-year-old. You have the catastrophic short-term plan for your medical. You have the marketplace major medical plan, and then through the government, and then you have the group health plan, either through an employer, or you could get group health by attaching yourself to a group health plan. So we will talk about those 3 things, as well as the ancillary. So just to wet your whistle, I'm going to tell you about the fixed benefit plan. I love this plan. It is fabulous. You can have just that one if you want to for under 65. But I'll tell you what, I do it in a way where you have the fixed benefit and you can set it on top of any of these other insurance plans. Fixed benefit, for example, I have a Manhattan Life plan. My Manhattan Life plan pays me $1,500 a day, day 1 through day 30, when I'm in the hospital. And that's when I'm inpatient in the hospital. The enhanced plan that they have now across the country pays $2,000 a day, and that is the classic plan. And they have 3 others that are much more than that. Then they can pay up to 10% of your cost for your surgeon, and then it's capped at 50,000. And your assistant surgeon, they'll pay you $1,000 if you are admitted to the hospital. My plan pays $50 for 6 visits to a specialist or to a doctor. And then the enhanced plan, the classic plan, pays now $75 a visit for 6 visits. If you don't use all 6, it rolls over. You also get $1,000 a day for cancer, and that's for treatment for, it could be for any kind of chemo or radiation. And then, and that's going to cap at 30 days later, and then, or 40 visits. And then you also have, for that particular classic plan, pap smear and a mammogram, you're paid $250. If you have a colonoscopy, you're paid another $500. And then you're paid $25 a day for sending in your RX. So most people, when I ask them who are under 65, how do you use your health care? I can figure out, okay, you get $250 back if you go to the urgent care. Okay, maybe $500 if you go to the emergency room. It's a whole long list. So anyway, you can get back typically $850 is what the average is.
And what plan was that?
To help you make sure it's safe,
Okay,
okay?
great. Thank you, Courtney.
And what
So-
carrier was that?
So that
Manhattan Life?
Manhattan Life.
Would you pull that up for me?
Yes,
Because
yes.
I really appreciate.
I will pull that up
We'll run through
and we'll run it.
adding, got the clients, the veteran,
Yes,
we've got his wife.
yes.
And maybe we can look at how you build an entire plan for an individual.
Yes.
I know it's probably not,
Yes.
you probably
No,
already have that.
No, I'll
It's just a good idea.
yeah, we're gonna do it.
You,
Yeah.
Because it is,
sometimes you
it's,
learn by seeing somebody doing it. You hear
Yeah.
them once.
yes,
You know, you
yeah,
see it,
yeah.
and then once you do it, you go like,
So,
Yeah,
so
you're
we're gonna deep dive that.
can hardly
And
wait.
so that is, it's my absolute favorite plan for the under 65. And I'll tell you why, because during COVID, one of my friends who was with Mercy Hospital, and they have a $5,000 deductible on their plan. She called me and she said, Diane, I'm being transferred to New York.
Really?
And I went, I'm like, oh my gosh. And that was during COVID. So she's
Yeah.
like, I'm afraid I'm gonna have to spend the 5,000. I said, let me find it. And so that's how this got really popular in my life with my clients. So, yeah. So that's what we'll do
Tomorrow with Diane.
with Kathy and Pam to be
With
continued.
us all.
Yes. This worksheet. Woohoo.
Right.
We did one.
That was a lot. It was
Yay.
good. Yeah, a lot of material. Awesome.
It was
Excited. Get all these.
Yes, I will
I
definitely.
hope
pull
I'm
it up.
licensed with them.
Oh, well, if not, we're gonna do it. because-
I'm gonna be getting that
Yes,
license, all this stuff.
Exactly. Okay, now how do I turn you on?
You come down, I guess. I wanna make sure you get it saved too.
How do we save it? That is the question. Okay. We just push end? No.
This was a great
It
idea.
was so helpful and it's something I've been needing to do and I think it's gonna be the future with insurance.
Absolutely. Now, if I could just figure out how to turn it off. It's hilarious.
Love that. I see the end button, but I wanna make sure it's saved.
I'll see you both tomorrow.
We'll see you tomorrow. Yeah.
Bye, wonderful. I'll see you. Love you.
You right click, you're not getting a save as.
I don't know. I don't know. Stop recording. What I
That
s-
would be good, yeah, you could do that. And then I see the three dots up there. Wonder if you right click or hit the three dots, it would let you do a save as. I don't know if you're gonna do it like as a PDF or.
I don't know. I don't know what happened. I don't know. Did I lose it?
I don't think so. I think it's right there.
How do we do it? I don't know.
Is that it right there? The two? or that's-
No, I think I just lost it. It.
I wonder what she was doing it in. But you go back.
I don't know. I don't know. There's that one.
Yeah, I'm wondering if it's in there. That's not today, what we did? Or
That is today.
want me to go see if I can get somebody?
Yeah. Damn. Dang it.
Oh, we're gonna be positive and it's there. Let's be positive.
Okay, come on. It's gotta be there.
I've never done one from a Zoom either, so.
I don't know. I don't know how to do it. There's today.
I wonder if you open it, I don't know if you should open it back up or.
I don't even know how to open it back up. Shit. I don't know how to do it. Oh, God. See, there's today.
Where is that? I'm looking for it today. I can't find what you're talking about.
This is this morning. That's this morning, but I don't have it. I don't.
I don't know if you should, what about, you got those three little dots to click it and see if it's in there?
No, mm-mm.
Something different.
I don't remember. I don't remember how to do it. Oh, shit. Really? Are you shitting me? Nope.
I didn't see, or, because I don't know where they are. Who did Courtney mention that will come save it?
Shondi and Jessica, and they didn't come down.
But I mean, nothing asking.
Oh, God, this is really caller. I don't know.
Got a back to meeting screen.
Where is it?
You're still in Zoom on this, it looks like.
Um, shit. Oh, shit. Shit.
Let's review your health insurance, you think?
Hmm?
Is it right there, the second one down? Let's review your health insurance.
This might be it. Yeah.
I still going?
Oh, we need, is that?
Yeah, the
somebody
Shondi.
to help?
Uh-huh.
Oh, okay.
Uh-huh. Pam, Shondi, Pam.
Hi. Good, we're hoping it's not lost.
It's an empty folder. It says empty folder. I don't know what I did. I don't think I got the second meeting. Damn. That was good too. It was really good.
Mhm. Oh, yeah, we had two. I forgot about that. So you think it got the first?
Got the
Click on it.
first one.
What does that one say? Computer recording. March 5th.
That's
That was the other one.
that was this
That was at
morning.
10 something.
Yeah, so I just closed the other one.
You closed it?
I-
Or go back to your Zoom. Or are you on Zoom?
I'm on Zoom. Yeah. I put
Does it go,
The
doesn't go
recording.
crash or anything by chance, or I don't know if it was anything.
it.
You browse by meeting.
I did.
Clicked on that.
Uh-huh. And it's not.
February. Let's see.
I don't know. I don't know what I did. I don't think I did it.
Can you go up to meetings?
Yeah,
with
up there.
recordings?
Yeah, that's what I
Was
was
it?
at the top.
Drop down. Oh, that's right there.
Where?
Right up
Right
there. Up.
right.
Am I on it?
We did that. Go up to that meetings.
That's this morning.
Oh, and that's one for.
Damn.
I don't see it anywhere.
Um,
Wonder if it's, can we check trash just to see if it?
where's the trash?
You go, it was on the other page.
Where's
If
it?
you go back, you got a back button,
Uh-uh.
or maybe hit home up there. I don't know
Uh-huh.
if we're in that, but I saw the trash.
Oh, that's on your other laptop. I thought I saw it over there on the Zoom.
No, where
What
would
is
it?
that back to meeting?
What is it?
That arrow back to meeting there? Oh, that's just back to the screen.